Mean it's going to make money on the overall trade over that more than a decade period. We're also focused on the house builders, as Lizzie was talking about. The message is to look forward. So even if they're seeing output slumping in the rearview mirror, they are confident in their ability to build more homes alongside Redrow as planning rules change, Guy.
Absolutely. Okay, here we go. The Wednesday opening trade is upon us. Let's take a look at how those futures are going to translate into cash. This is what we are seeing already on the screen. Red as anticipated. Losses coming through. The FTSE 100, I suspect, will accelerate to the downside. Maybe you will see fewer losses, though, than maybe some of the other European markets. There's a little tech here, but there is some oil. So remember how that's going to be priced in as well. The 600's out of the gate. It is down by 0.6%. We'll see how that develops. Waiting for the CAC, DAX, SMI and IBEX all still to open. The IBEX is down by 1.2%. I'm rounding up as Critty's already done. Let's see whether that continues to the downside. The CAC is down by 1.1% this morning. So we're starting to see a little bit more on the downside for the stock 600 right now. The FTSE's down by 0.9%. Still waiting for the DAX, still waiting for the SMI to open. But the expectation is we're going to see weakness in a number of sectors today. It is not just related to the chip story, but that is really where I suspect the epicenter of the action is going to be, Critty.
I think you're absolutely right on that. It's a pretty broad sell-off you're already seeing from out of the stock 600, out of the FTSE 100 as well. And it's a lot of it is concentrated in some of the heavyweights. And I thought this was interesting. There it is, red on the screen across the board. Even if you do have some outperformers, Anna, some green on the screen in the likes of Sanofi, Reckitt, for example. There are a couple that are standing out. But net, it's Novo Nordisk, it's LVMH, it's ASML, it's even Shell. So again, sector by sector, your biggest heavyweights dragging this market down.
That looks like a heck of a lot of red, doesn't it? We don't have any sectors in positive territory. The best performing sector is still negative, and that's personal consumer goods, the likes of Reckitt, Benckiser, Carrefour, going a little bit higher. Unilever holding its head above water, but elsewhere we are weaker. Financial services seems to be where we're selling here in Europe, and that's obviously a sector that Europe has some heft and some weight in. But UBS is down by 3.9%, EQT down by 2.4%. So a host of financial services names seem to be coming under the spotlight today.
BE Semi's down. You've got, it's an interesting mix, actually. So BE Semi's down. Aegon's down. Some of the insurers are seeing some losses here as well. UBS is under pressure, as you say. Really interesting mix in terms of the stocks that are seeing weakness this morning. Yeah. Richemont is down. We've talked about kind of what's happening in the luxury space, but Richemont is definitely off the pace this morning. Where are you seeing safety? There are a few thin pockets of it, but Reckitt Benckiser is a stock that stands out. Danone is a stock that stands out. Yeah. So people are definitely seeking safety in this market this morning. Yogurt is the place to go.
Consumer goods, apparently, yogurt. I want to bring it right back to UBS because you mentioned that financial concentration in terms of the sell-off here. After market yesterday, the Swiss regulator FINMA actually talked about reining in some of the things or some of the models that Swiss banks are doing. Well, I should say this really just one now, UBS, in terms of their growth campaign. So I wonder how much of that is a little bit of a read-through into the UBS.
Let's talk about where we are on the broader risk sentiment right now. Yesterday, the team in the US, while markets were busy selling off, stocks were under pressure. The S&P down by more than 2% by the close. They caught up with Morgan Stanley's Jim Caron to get his assessment of how much bearishness there should be in these markets right now.
I think that the equity markets today are asymmetrically skewed to the downside, at least over the near term, at these current price levels. So I think the market is going to really focus on the bad news right now. So bad news is really bad news. And that is probably what creates the correction that I think is going to occur in September.
Morgan Stanley Investment Management's Jim Karen there speaking to the team stateside as markets were selling off. Let's continue this conversation. I'm pleased to say we're joined by JJ Kinahan, CEO of the online trading provider IG North America. Very nice to see you, JJ. Really good day for you to be visiting us here in London. We're very grateful. Yeah, we're very grateful for your presence. Thank you very much. So we just heard the Morgan Stanley view there, talking about a correction looking likely in September. September is vulnerable to that kind of thing. What are your expectations?
Well, you know, again, it's the first trading day, just like the first really trading day of August. I think that August came back with quite a surprise. So to see us sort of visit halfway down to the levels we saw there isn't maybe a big surprise. How quickly we got there might be for sure. I think one of the bigger differences, the only reason I believe this can continue over a few trading days is if you look at the VIX, which measures volatility on the S&P 500. If you think about what it did in August, it was a one-day really fast up, started to come off really fast. If you think about yesterday, it was a pretty orderly sell-off. There was no real panic. And so when you don't have a panic, that's the time it can continue for a few days. You guys talked about NVIDIA a few moments ago. I think NVIDIA is certainly, you know, has become sort of the leader, if you will, in terms of how people view the stock market. The thing to keep about NVIDIA is the last 3 years, it's been down on average 13%. And so, you know, we see it, of course, down yesterday. Looks like it's going to be down this morning with some of the news after the close yesterday. So with that, I think that that's the type of thing that hurts sentiment and puts people on the defensive looking to sell assets.
And when things sell off in August, it's easy to say, well, people are on the beach and this is it's overdone. Let's wait until people come back to their desk. But September has a different feel to it, doesn't it? Does that add another dimension?
I think it does, because it's the time of year, to your point, when people are back from the beach, kids back to school, so you're looking at everything every day, and people are cleaning up maybe their portfolios, et cetera, what happened in the summer. So obviously a big cleaning yesterday, if you will, and so we'll see what happens over the next week. Again, I'm not real panicked about it right now, to be honest with you. I think what it does do, though, is as we head into Friday with the employment numbers, that becomes much more interesting, as does the Fed meeting here in a couple of weeks.
What's the trade? If you see a beat on employment, does that throw out all the rate pricing?
No, I don't think it does at all. I think, you know, if you look at the probabilities of a rate hike, it just seems almost inevitable that we're going to have one now. I think the real question comes at the next meeting and how many we get before the end of the year. You know, in terms of what's the trade, I look at what our clients have done the last few weeks. That the stocks they've been buying, of course, been NVIDIA, because it is a leader of retail stocks. But we have also seen Visa, which and Chipotle, with the new CEO, has gotten a lot of support. And on the sell side, it's been really interesting. You guys were just talking about buying food, you know, buying yogurt, where we've seen, you know, our Tasty at IG and our Tasty Trade clients selling has been McDonald's, Starbucks, and Disney. So,
is that a China trade, though, on McDonald's and on Starbucks?
I think it's an inflation trade. Okay. More than anything else, to be honest with you, because people, again, you know, as they start to feel higher prices, are they willing to pay up to, you know, £4 or £5 for a cup of coffee? And I think on the other side, it's really interesting to me that Visa has done well, or people like Visa. And the reason I think that that's happened is because the stores like Dollar General, et cetera, have done so well. So people have maybe moved down the scale a little bit. What concerns me there is what will be, you know, we're already at such high debt levels in terms of credit cards. Will that continue?
Oh, man, I could talk about these stocks forever. Let's talk about the chip sector, though, because this is a one that's certainly bleeding into the European session. And I think so much of it gets roped into the NVIDIA trade, the AI trade, et cetera. There's also an argument here that there is a Biden-Trump kind of trade mixed into as well, given so much of the chip sector has benefited from the CHIPS Act and the IRA story, that it is ultimately a fiscal spend, one that's now dropping mostly because of options trade. How do you view the chip sector? What is going on there? What's it responding to?
Well, I don't know that I would say it's dropping because of the options trade necessarily, but we have seen a lot of puts be purchased over the last few weeks. There's no question about that. But the chip sector in general, I agree, I think there's something else that's going on there that you saw not in NVIDIA's earnings, but in earnings from Amazon, Microsoft, et cetera, from the analyst questions afterwards. So much money's been spent on AI over the last couple of years, particularly in the last 6 months. How are these companies going to monetize it? And I think that's what's really happening is they've spent so much up front. Nobody's really answered the question of how are you going to monetize the hundreds of millions of dollars you spent up front, and where is that coming from? And I think until somebody shows some real payoff for the money spent up front, that's going to be the primary question, and that's the thing, to me, that's the biggest concern for NVIDIA.
Am I going to get paid for buying the dip this morning? Is that the right trade?
Here's what I would say. One of the reasons that we started Tasty at IG here is so that people can trade options and futures back to the U.S. For those who understand options, to me, this is a time rather than just buying stock, maybe you think about selling out of the money puts if you do want to buy a stock. Yep. But the other thing to consider is this for retail traders. Too often, they're all or none. If you're buying the dip, what I would say is if you have 200, 300... Yeah. Absolutely average, 100%. This is the time to do it. And if you say you had 300 shares to buy, you only got 100, we bounce back. Boo-hoo, you were right and made money.
In terms of the slightly longer term picture, though, in terms of sort of buying the dip, do you get a sense that the highs are in for the year? Do you get a sense that the more longer term picture is one that stocks are going to struggle in?
I don't know that the highs are in, but here's what I will say. I think the volatility level will absolutely continue for the rest of the year to be elevated.
So
well, actually, to be closer to historical, to be honest with you, because that's where we're really at. We were just at such a lower volatility, of such a low VIX level for so long.
But that has an impact on risk. If I'm a risk officer, I'm looking at that VIX, I'm going, you know what, you can't take, your manager, you can't take the risk that you were taking before, and that takes money out of the market.
It adds a problem of liquidity at times. That I agree with 100%. In the biggest stocks, that may not, the Apples, the NVIDIAs of the world, that may not happen. Now, on the margins, it may, because people aren't going to be able to sell way out of the money puts, buy, or sell way out of the money calls. But for the stocks that trade a lot, I think they'll continue to trade a lot. Some of the other trades, or some of the stocks that aren't in the top 20 to 50, that's where you may see some of the liquidity drain. Markets widen out a little bit. That's where you have to be a little more careful. Always be the smallest fish in the biggest pond.
A topic that we talk about a lot, I'm bringing it back to the chip sector, is every time we have an NVIDIA earnings report or a big tech earnings report, it doesn't seem to be hedged to the downside. I think Apple was the exception to that. NVIDIA, for sure, the hedging to the downside was very, very cheap, and no one was buying into it until now. And I think this is really interesting. Walk us through, one, why that was happening, and two, whether that's going to change given the last time we've heard from them.
Well, I think memories tend to be short. I'll say that. So for the next 2 quarters, I would expect that you would for sure see it. But again, you know, their earnings weren't bad, though. Let's say this. Their earnings were pretty good earnings.
Yeah.
I just don't know that there was a number that they could have come out with that the street would have been satisfied with. So I think that's what they faced, is it's done, the stock's done so well. What were you going to say? Yeah, we beat on every metric. We didn't beat by, you know, $10 per share. So again, I think that was a little bit of the issue. But as I said, I think they did so well that they're almost a little bit of a victim of their own success. I do find it interesting, Crypti, to your point, that maybe you didn't see as much hedging to the downside, but again, this is a stock that you didn't get paid to hedge to the downside for the last couple of years. Every time you did, you lost money. So I think people are like, well, you know, until they're shown that it pays off to do, they won't. And now, to your point, I think what'll be interesting is to watch the out-of-the-money puts over the next couple of earnings cycles. I would expect those prices to be a little bit jacked up.
Nearer term, we're looking ahead to a jobs report on Friday. With this volatility on just day one of September in U.S. equity markets, how are you thinking about Friday and how that report might go down with markets?
Well, I think that, you know, as many have been saying, bad news is now bad news, which is a little bit of a change in the market. So I think a miss on jobs will hurt significantly, and a beat will probably be looked more favorably. What I like to look at is where are the jobs created, and what I mean by that is many of us have started out in our careers working in restaurants or bars or whatever, or the hospitality industry, and that's fantastic. But you want to see careers being created. What's going on with manufacturing? What's going on with transportation jobs? Those are the types of jobs that I would look for. You will probably start to see, you'll see, I would think, more government jobs because cyclically, as we talked about earlier, Anna, kids are back to school in the U.S., so the teachers being hired, et cetera. So I would expect the government jobs to be a bit higher, but I think you have to read through as to where jobs are being created, and that's the most important part of the report.
JJ, thank you so much
Thanks for having
passing through our studio as you're in London. JJ Kinahan, CEO of IG North America. Guy, it seems that stocks off their lows, but still down in Europe, and the tech sector really being hurt today.
There's also downgrades in the markets. ASML is under pressure as well as a result of a UBS downgrade that is impacting that stock. Volatility is the story, really, that we're watching very, very carefully, and it's the VV, it's the volatility that I think is really worth paying attention to at the moment. In terms of what we're watching, in terms of the core six, look, there's some significant losses there. Look at where the market is hiding out. Nestle. Just want to double check that one and see what's going on there, but it does seem as if yogurts and food and things like that appears to be a safe haven this morning, as is Ferrari.
Are you hungry?
It must be.
It's
the treat economy, isn't it? Isn't that what they call it? The chocolate.
Let's call it the breakfast economy. That'll do. Ferrari down a little bit. Luxury kind of is a little all over the place, but the action's certainly centred in the chip sector this morning. Look, we were talking to Schneider a little bit earlier on. It seems to be actually doing fairly well this morning, but ASML on that downgrade is getting hurt.
Guy, let us check in on some of the other movers in this morning's session. Lizzie Burden has a rundown.
Well, Anna, I want to pick up on that theme because we'll start with the European chip sector, and you can also see the hit to the likes of Infineon and ST Micro this morning off the back of the Nvidia sell-off yesterday. But if we flip the board to some of the other movers this morning, Deliveroo, Critty, I know you were expecting a move. This is after Bridgepoint sold its remaining stake, and indeed the share's down nearly 3.5% this morning. Flipping over again, one of the other potential movers we were looking for was Telia, down 2.2%. Not as big a move as perhaps expected, but the news is that they're aiming to cut headcount by 3,000 jobs this year across all the units, but perhaps not as big a move as expected because this headcount has been happening on a year-on-year basis, these cuts to headcount, for the past 11 quarters. So down 2.4%. Flipping over to the next mover of the morning, we have Barratt Developments. I told you we had the earnings earlier, and the bigger picture is, of course, that they're looking to capitalise on this new Labour government's planning overhaul. They've got their tie-up with Redrow. They're acquiring it to become the UK's largest home building operation. But the reason that they're in the red this morning is because if you dig into their results, actually they have said that yes, home completions in the past year were at the upper end of expectations, but that's still nearly a fifth lower than this time last year, and sharp falls across most of their metrics from profits to margins. So Barratt in the red. And just finally, flipping over to Commerzbank, we were talking about it earlier. You're seeing the German government looking to reduce its stake from 16.5% because Commerzbank had been riding on the ECB's rate cuts, hikes. Now it's cutting rates, and so traders looking to follow the German government's lead. There are movers this morning.
All right, Lizzie Burden, we thank you so much for walking us through some of those early movers. We're going to have more on that Commerzbank story, as, of course, Lizzie mentioned, Germany planning to cut its stake in the lender. We're going to dive into the details of what's behind the move, what we're seeing, and why. Stick with us. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We're about 20 minutes and change into today's session. You are seeing red across the screen, although bouncing back from some of the lows we saw at least 10 minutes ago. So you are seeing a little bit of a revamp. We'll see if that leads to some sort of positivity later in the session. But right now, tech very much dragging on the index, as are financials in this part of the world. Right now, you are seeing the Euro Stoxx, or actually the Stoxx 600, down about, we'll call it 1% if we can. There's another major story that we're keeping our eye on outside of the stock market, and that's what's coming up later today at about 3 p.m. UK time. We are going to get a closed-door report from Mario Draghi. It looks like he's going to be speaking to senior parliamentarians over at the EU. Guys, I think this is really interesting as well, because we've had a leak from it already. He's talking about competitiveness getting in the way of a defense ramp-up. This is a widely expected report. We may get some more leaks out of it.
I think we probably will.
Yeah.
I think the expert talk to parliamentarians. I think you're going to get some leaks.
I'm willing to go out and say that. But I'm curious what else he says, especially given he's a very well-respected person.
Yeah, absolutely. When somebody like Mario Draghi lends the benefit of his expertise to assessing the competitiveness gap between Europe and the United States, you want to pay attention. But will he have any more answers than the other reports? I think it was 2010 we got another report on European competitiveness, and it's a perennial problem, isn't it? And he's already told us there's a lot of money we need to find for green and digital technology.
European Commission should be paying attention. This is going to be effectively what it needs to deliver over the next Parliament. And you do also wonder with the gaps at the top of the German government and the French government, are we actually going to see any of this enacted? Talking of Germany, let's talk about what is happening with Commerzbank this morning. The German government is going to be selling down partially its existing current stake in that bank, which it took on, remember, 07-08 as a result of the financial crisis. I think it needs to get out, Steve Aarons was telling me, at 26 to break even. It's not going to do that. The stock is currently trading at 12. Steve, why is this the right time to be getting out for the German government?
Hey, so, I mean, yes, the government would have to achieve a much higher price for it to break even, but, you know, it's water under the bridge, essentially. What they're looking at is the share price rally that's been happening at Commerzbank for the past 4 years, really, thanks to interest rates hiked by the ECB, and that share price, you know, is just much higher than it used to be, and they're seeing an opportunity to take advantage of it and, you know, make some money, I suppose.
Okay, so it's opportunistic, perhaps, given the recent history of Commerzbank's share price, even if over the longer term they don't make money here. What does it mean then, Stephen, for Commerzbank itself? You know, when we speak to them about this, and Critty was reminding us, we talked to the CFO about this very subject recently, they usually say, well, that's something you've got to talk to the government about, obviously. And what does this mean for the bank?
Well, I think if a big investor decides sort of to sell down a stake in a company such as Commerzbank, it sends a signal, you know, we don't expect the share price to go up much higher and for longer. And so other investors will probably think about, what does it mean for us? We have reported previously that Commerzbank is looking for fresh investors, and now that the biggest one is reducing its stake, I think that task is becoming even more urgent for them. And those will be the challenges facing Commerzbank CEO Knof and CFO Orlopp for the next months and even years.
Stephen, thanks very much. We're both Steve Aarons with the latest on Commerzbank and the decision by the German government to sell down its stake there. Let's talk, well, we'll go from the business of banking, retail banking and other banking in Germany to the wider monetary policy backdrop in Europe. And Chrissy, this is something that you put on our radar. This is reports in the Spanish press that we're finally going to hear today, or there is an expectation we finally hear today, who is the central bank governor over in Spain, because they've been without one for 3 months.
Yeah, they have, and have therefore forfeited their vote when it comes to monetary policy as well. I think what's interesting is that this is an announcement that's due to come, I believe, 3 p.m. Madrid time, 2 p.m. UK time as well. And I think that the candidate here is really interesting. This is someone who's currently the Minister of Digital Affairs over right currently. He's had a history at or a resume that boasts the Bank of International Settlements, the BIS, BBVA, which is one of the top banks in Spain and arguably around the world as well. How does he really take on the monetary stance of Spain right now, which is an economy that is outperforming, by the way? This is really interesting because normally this is an apolitical decision. So this is somebody that everybody within the political classes are happy with. You make that decision and you put that person forward. As you say, this is not that this time. Not everybody's on board. Not everybody in Spain within the opposition thinks that this is the right guy to put forward. And I think that's really interesting that tells us something about where we are in Spain and the kind of the potential instability that could work around this as well. And kind of, if the government changes, how does that change in terms of the central bank position?
Yeah, we're just showing pictures of Jose Luis Escrivá. We should reiterate there's no decision made yet. So this is just the expectation. This is the name doing the rounds in Spanish newspapers, isn't it? Essentially, Chrissy, an expectation that. But to your point, the politics gets in the way here, in particular for somebody who's actually worked for the Spanish government. So this is a person with a whole lot of experience in lots of different aspects of banking. He's been at BBVA, he's been in government, he also worked at the BIS, and he worked previously at the ECB. So he brings a lot of experience if he gets that job. He does, and I think this is something that you often ask in terms of the wider European context, but this is someone who is kind of facing the issue of a technocrat and whether a technocrat should actually be in that position, simply because that was the pushback against his predecessor, Hernandez de Cos, and that's actually ultimately one of the factors that led to his removal as well.
But
this
you
is
think about it, central banks are becoming, are central banks becoming more politicized?
Right.
I think is a question.
And vice versa.
Maybe, yes. But you think about kind of what Donald Trump's saying about the central bank in America and about independence, about how critical that is or not critical from his point of view. Politics beginning to, that boundary beginning to blur a lot more at the moment.
We have a rate decision in Poland later this morning, and there's no expectation that rates change, but that in itself is attracting political attention because the central bank governor came back from Jackson Hole where the US are talking about cutting interest rates, and now politicians in Poland are asking that question of their central bank governors and saying, when are you going to cut interest rates? So the politics is there in the background.
And if I remember you correctly saying, this is the first time they have a rate decision, they haven't changed their rate in about 11 months or so?
They definitely haven't changed for a while.
For a very, very long time. All right, we're going to go from Poland to a different part of the world coming up in the program. We're going to dive into Israeli Prime Minister Benjamin Netanyahu holding his hard line on Hamas. That convo next. This is Bloomberg.
In global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and Radio. Context changes everything.
This is the opening trade. About 30 minutes into today's session, we're getting breaking news crossing the Bloomberg terminal coming out of Germany, set to target a sale of about 3 to 5% of a stake in Commerzbank. Look, they're still going to be holding on to it. Guy made the point earlier that for them to actually make money on this investment, the stock actually has to double. Whether or not we get there is a very, very different story.
Got to get to 26. That's just a break-even rate. So to make money, you've got to go even higher. And you sell some of it now, that makes that number even change quite significantly. Why don't they? Why are these banks? Why are these governments still holding these stakes? Same with the UK government. Why are we still in a position where 10 years on from the financial crisis, we're still in a position where a lot of these governments in Europe still hold bank stakes?
Well, we have seen the UK government getting out, the previous one, getting out of NatWest gradually, and they had a plan to put that to a retail audience and try and sell it that way. In Germany, I don't know the answer to your question, but I wonder, is there anything to do with M&A that's in the minds of people in Berlin here? You know, we talk about cross-border M&A. Will that ever be a realistic opportunity in the Eurozone? We also talk about within-country M&A. Now, depending on what flavour of M&A were to present itself at the doors of Commerzbank in some future made-up universe, you know, would a German government want to have a seat at that table? I'm just asking the question. I don't know the answer.
I don't know the answer either, and it's more than 10 years ago. It's going to be more than 10 years ago.
Oh, maybe is it too short?
Feels like it was just yesterday. But I'm curious, and given the budgetary constraints as well.
Yeah.
Take the money.
We're going to have to see how this all plays out. It is a fascinating one, though. I got to say, it was one of the major culture shocks here that so many of these European governments do have stakes in a lot of these companies, not just the banks as well, but the likes of infrastructure places, Telefonica, Telecom Italia. There's plenty in the periphery as well. So, of course, we'll be monitoring that story. Those shares down just shy of about 3% right now in today's trade. I want to make a little bit of a pivot here and talk about another story that we are keeping an eye on. The U.S. Justice Department has announced criminal charges against 6 senior Hamas leaders on counts of terrorism and conspiracy to kill Americans, including some linked to Hamas's October 7th assault on Israel. It comes as President Joe Biden expressed frustration with Benjamin Netanyahu's efforts to secure the release of hostages held in Gaza. Michael Froman, president of the Council on Foreign Relations, spoke to Bloomberg about how President Kamala Harris, if indeed she does win the Oval Office, might go further than Biden in terms of ratcheting up pressure on Netanyahu. Take a listen.
I think the matter of emphasis is that there are some small indications that she has been more willing to say out loud what we know the Biden administration has said privately to the Israelis, which is that they've got to do more and better to avoid civilian casualties in Gaza.
The Council of Foreign Relations President Michael Froman there speaking on Bloomberg's Voternomics podcast. Let's get a little bit more insight here and bring in Dalian Scheinlin, political analyst and author of new book, The Crooked Timber of Democracy in Israel. Dalia, a pleasure to have you on the program. I think one of the big questions the international community is asking is this time different? The pressure that we're seeing build up domestically on Benjamin Netanyahu will actually change anything in terms of his approach. Your thoughts?
It's impossible to say 100%, but I have to say that many Israelis feel like the country has been through various rounds that look a lot like what we're seeing now. There have been people on the street for months. Every single week there are major protests. The difference is that, A, the protests became much bigger, possibly up to 300,000 people were on the street on Sunday night, and then continuing every night this week. And, of course, that there has been a strike called by the major labor union, Labor Federation, Histadrut. And so there is some more kind of pressure that's not just about people demonstrating their anguish, but also about actions that can sort of constrain the country. However, Netanyahu has reacted so far with his typical reaction, which is to dig into his position and try to argue to the Israeli public why there cannot be the kind of compromise, particularly over the Philadelphia route that separates Gaza from Egypt, that he has most recently decided is the actual deal breaker with relation to reaching that ceasefire hostage deal with Hamas. And so he is certainly giving off signs that he does not plan on changing policy right now. And we have reason to think, based on all the rounds prior to this point, that he still does not intend to get to that kind of a deal.
You make a crucial point on that Philadelphia corridor, which, if I'm correct me if I'm wrong, Egypt is saying is a non-starter when it comes to that border or their northern border there. Dalia, talk to us a little bit about where his support is actually coming from. If you, as you outline, see pushback from the trade union, from the top courts, from his war cabinet, not to mention the opposition, what support is he actually able to tap into?
Well, first of all, he doesn't only have the support, he has the ironclad loyalty of the two coalition parties who are essentially holding an ultimatum over both him and the Israeli public. Not that I want to suggest that Netanyahu is backed by them. I think they are essentially aligned on this. But his two coalition partners, who represent two very extremist, ultra-nationalist, frankly, fanatic parties in government, are saying and have been saying since the very beginning that if there will be a hostage release ceasefire deal, they will leave the government, they will take the government down. That would throw Israel eventually into elections, even though there is sufficient support from other parties for Netanyahu to pass the kind of hostage release ceasefire deal that's being discussed. He could definitely get that done, but he is concerned about losing power. So first of all, he's got the political support and alliance of those parties. Now, I should say that although surveys regularly show that a majority or a plurality of Israelis support hostage release deal at the cost of Palestinian prisoner release and a ceasefire, there is a not insignificant minority of Israelis who are opposed to that deal, even though everybody will talk about and certainly probably feels, well, I say certainly and probably, people all feel the compassion and empathy and anguish for the hostages and the families themselves. But there is about, I would say 35 to 40% who think that to make this kind of a deal, even in order to get the hostages back, is wrong, is a security threat, and would mean that Israel is capitulated to Hamas and possibly given incentives for future hostage taking. And so that is an argument that Netanyahu is able to leverage and exploit, and it's not an insignificant argument. But there is a very widespread feeling in Israel that those aren't the real arguments. The heads of all the security establishment have been saying over and over again that Philadelphia corridor should not be the deal breaker. The Israeli security establishment can cope with the challenges of the Philadelphia corridor through various mechanisms that have been proposed over time. And that, people who've worked most closely with Netanyahu, including his former war cabinet partners, who've come out and said that is not the problem. Netanyahu is stymieing this deal for his own purposes. And he does not need to take, the security considerations are real, but they are surmountable. And that he is doing this primarily in order to stay in power. So whether or not we can look inside Netanyahu's head, that is a very, very widespread perception among the public and among the people who've worked most closely with him.
Dalia, I wanted to pick up on that point, and you've mentioned it a couple of times, but just to sort of get more of a sense for the international audience on this, to what extent is there this perception then in Israel that Benjamin Netanyahu is deciding is making decisions based on his own expectations about his political fate rather than necessarily what's going on in the country as a whole?
Well, surveys have shown us since the very beginning of the war, almost from the first couple of months, that those are the considerations in his mind, or at least part of the considerations. There are very few Israelis who believe that he is making the wartime decisions absent these personal political considerations. Again, Israeli society is deeply divided, but as a broad rule, you can imagine that anybody who is currently saying that they would vote for parties of the opposition completely believe that he is making decisions for a political reason, and anybody who is currently stating that to survey researchers that they would vote for the current parties of the current coalition, it places somewhat more faith in Netanyahu, but he has lost the majority in all surveys since October 7th, and frankly before that as well. And so what we see now is roughly 40 to 45% who would vote for parties of the current coalition, not a majority. And those people are more likely to think that he is making decisions for the right reasons, or even if he's making them for the wrong reasons, that they agree with his decisions. But very consistently, we have a majority of Israelis who want him to leave office and not run again for prime minister. And that runs as high as 65, 70% in most surveys. Similar numbers say they don't trust that his decision-making is fully for the good of the country and is untainted by political considerations. Most believe that he is taking his personal political need to stay in office into account in making these decisions at the expense of the lives of Israeli hostages.
Dalia, if the objective here is to bring Hamas to justice, how significant is it that the US Department of Justice has unsealed these terrorist charges against senior leaders of Hamas? How does that change the calculus when it comes to Israel's perception of what needs to happen next and the ultimate objective of achieving that justice for what happened?
I think that it would be a little bit misleading to put this in terms of Israel's aim to hold Hamas to justice. What Israel has named, certainly the prime minister has named the aims of the war many times, and that is to destroy Hamas's military and governing capacity, to make sure that Hamas can never threaten Israel from Gaza again, and to get the hostages back, which nobody really believes that's a high priority for him anymore, and to get people to be able to return back to the northern border. That's how Netanyahu has defined the aims of the war. Bringing Hamas to justice is not one of those aims. However, I do think it's very critical because there is frankly, a little bit of an inexplicable perception that has been permeating Israeli conversations that somehow the U.S. is not sufficiently on Israel's side. And it's not a mystery. It's because the prime minister does a little dance on the one hand, conveying that he's a great friend of President Joe Biden and that Joe Biden has been very loyal to Israel. But on the other hand, every single thing the U.S. tries to do to use that credibility with Netanyahu and to use that very stalwart, practically overwhelming support of money and arms and political cover, every time the U.S. tries to do that to push Israel even just a little bit towards accepting a ceasefire and a hostage release deal, which is for Israel's own benefit, Netanyahu, on the other hand, then portrays that the U.S. has overstepped and is possibly not loyal enough and that a Trump administration would be better. These are the kind of implicit messages that are conveyed. We see it playing out in Israeli surveys. And so back to your original question, I think the announcement this morning from the Israeli public discourse perspective will essentially reverberate in ways that say, well, the U.S. is behaving in a balanced way. It is certainly targeting Hamas for its, for this kind of sanction, as opposed to just placing sanctions on Israeli settlers, which is interesting because that's how Israelis see it. They are prone to dismissing the overwhelming American support for Israel and focusing only on the fact that U.S. had placed sanctions on a few of the most violent settlers and settler organizations. So this will portray to Israelis that there is some sort of a balance in how the Americans approach it, which in itself is misleading because, of course, America has been so overwhelmingly supportive of Israel. But still, that is the reality of how Israel is seen.
Thank you very much for your time, Dalia Schindlin, political analyst and author of The Crooked Timber of Democracy in Israel. We appreciate your time and thank you for bringing us an update on politics in Israel. Let's pivot to another geography entirely, and Ukraine is bracing for IMF pressure to devalue its currency and to cut rates. A red headline across the Bloomberg terminal tells us that there is an expectation, and this is people familiar with the situation talking to our reporters. Ukrainian officials are expecting that the IMF will put this pressure on the country, and the result of this review could be that they're able to access more funds, $1.1 billion disbursement to Ukraine.
We've obviously seen the deal done on the debt recently.
Yeah.
I think the effect of all of it is basically just trying to stabilize the situation, as you say, to access more money further down the road, to make sure that actually the numbers, stack up that the currency is actually probably at an appropriate. There's all kinds of levers you need to pull here. I think the big one was the debt.
The big one was the debt. I think it was like a 20% review as well. The 1.1 billion disbursement is interesting as well because something that the Ukrainian government is considering in terms of a fundraising approach domestically is something like higher taxes. So a weaker currency hits that as well.
And our story points out that depreciation of the currency and higher taxes all would be quite politically damaging. The population obviously ravaged daily by war, and continue to watch that story. Let us pivot to what's coming up next on the programme. Coming up, oil extends losses after a drop of almost 5% yesterday. We take a look at what was behind that slide. Oil prices continue to slide today. 69.28 on WTI, 72.74 on Brent. We'll get an update on what's driving oil markets. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Data disappointment was a PMI that was expected to be 49.5 and came out at 49.1. Does that justify the oil market being at a record short? Absolutely not. It's not a collapse that would justify the market being as short today as it was in the global financial crisis of 08.
Of course, Jeff Curry, Chief Strategy Officer for Energy Pathways over at Carlyle now, talking about China and the impact that its data is having in terms of the oil price that we are seeing. Oil extending declines. We saw a big loss yesterday, 5% circa to the downside. the possibility of political unrest, easing in Libya, maybe shifting the focus back to what is happening with the production boost that we're expecting by OPEC+. There's a lot of kind of forces coming together here. Let's try and get some answers. Bloomberg's Anthony DePaola joins us to discuss what is happening here. Jeff Curry's not convinced this is all China. If it's not all China, what is it?
Yeah, Guy. Hi, good morning. You mentioned some of those different factors in there. The OPEC Plus boost that's coming in early next month, where they're going to bring back some of the oil that some of those members had taken off as part of those voluntary cuts. They're going to ease those back into the market, that is. And we've got Libya potentially coming to a solution to this political crisis that has caused oil production and exports to be cut off there in that country. That's about 500,000 barrels a day of oil that's been taken off the market in Libya. Libya normally produces and exports about 1 million barrels a day, so it's a big chunk of the oil market. But Libya is very unpredictable. We've seen them cycle up and down many times. Over the last 3 years, they'd reached a little bit of stability, but now we're seeing over this past weekend fields being shut down, opened up, coming back. We had seen vessels continuing to load and export over the weekend and through today. We still have some there, but crude in storage is limited there, so that is an impact. But this news that they may come back in the market, that they may reach that political solution, that was really the spark that kind of put things off yesterday and really led to this decline.
Well, Anthony, you point out the crucial news there, and I want to just dive in briefly to discuss the very political crisis that you have broken down for us. It's erupted over control of Libya's central bank and stalled oil production, as you mentioned. Stick with us here. Bloomberg spoke to the ousted central bank governor yesterday about the country's dependence on oil. Take a listen to what he had to say.
There is, liquidity crisis as well, and, the barrel rate started, skying up, which is very bad. We are fully dependent on the oil revenue.
Anthony, I want to bring you back into the conversation here. Walk us through, for an international audience, just how important those flows from Libya are in a global context.
Yeah, 500,000 barrels a day. That's out already. That's a big chunk of the oil. I mean, if we talk about Libya's total production, 1 million barrels, that's roughly kind of what we would see in terms of a demand increase. So over a year. So that's really a way that would shift the market, because as we look forward, we're looking at non-OPEC plus production coming online. It happened this year. It's set to happen next year. That pretty much takes up all that demand increase. So if we had Libya come out, that would kind of cancel out that supply from outside of the OPEC plus group. But listening to that central bank governor, it doesn't seem like we're going to get that. They are working towards a solution. There are international bodies and world powers also that are talking with the Libyans to try to find a solution there. And you'd think that the Libyans themselves would want to get that oil back into the market because they need that income. Even if prices are lower, they still need that income coming in. But we are really dealing with this kind of difficult market, and any kind of movement like that, production out, production in, has the capacity to move the market up or down.
Anthony, thanks very much. Thanks for explaining some of these dynamics in the oil markets. Bloomberg's Anthony DePaola with the latest there, and we do see oil prices continuing to be under pressure, losing another 1% today. Let's switch our attention to another story that is in a related field. Africa's biggest crude producers in focus there, Nigeria also in focus, which up to now has imported all of its refined oil products. This country is now saying that the new multi-billion-dollar Dangote refinery will start distributing gasoline by this weekend. So this country making the step into refining. Let's bring in our Nigeria Bureau Chief, Anthony Osei-Brown, who's in Lagos for us. Good to speak to you, Anthony. So how long until the refinery is running near capacity? Because yes, there's a sort of this positive story about moving on to being able to refine their own products, where previously they had to import those, but they've still got a long way to go until they get to capacity.
Yeah, currently I think the estimate we have is that the refinery is running around 50% of its 650,000 barrels per day capacity. We're not certain what capacity they will be running at when they start producing PMS, which is expected to start rolling out over the weekend. They started filling tanks yesterday, and hopefully by the weekend, they will start distributing across the country. The downstream regulator, regulator in the Nigerian sector, said they are estimating that Dangote will be producing around 28 million barrels, 28 million liters of gasoline daily this month, and that will increase to about 30 million liters by next month. Nigeria consumes an estimated, that's very debatable, between 40 to 60 million liters daily. So we don't know when they will be able to meet that full capacity. But then when the Dangote refinery starts producing at full capacity, they're able to meet all of Nigeria's demand and have enough to export.
Anthony Osei-Brown reporting for us over in Lagos. We thank you so much for bringing us that crucial context. For more on the story and other key trends across the continent, do not miss Bloomberg's Africa Amplified, which airs this Friday. Of course, we're going to be diving into all of the political dynamics and the implications in the oil market as well. A lot to digest there, but of course, that on the radar for this week in terms of oil. Plenty of other things on our radar as well when it comes to the broader data that we're watching. Of course, we have plenty of Fed speak as well. Actually, sorry, central bank speak. For us to have it there. ECB Governing Council member Francois Villeroy de Gallo will be speaking alongside that plenty of that U.S. data. We're all kind of waiting for that payrolls number on Friday. But until then, trade balance, factory and durable goods orders, we'll see if that moves the market or if everyone just kind of waits on the sidelines, digest the sell-off that we're seeing in the stock market. But for me, it is all about two very key items happening today at about 2 p.m. and 3 p.m. UK time, respectively. Spain announcing their new central bank governor. What does that do to ECB policy as a voting member? And then, of course, what do we hear from Mario Draghi around that competitiveness report?
Yeah, absolutely. So what new will he add to the conversation around competitiveness? That gap in technology investment between Europe and the United States has been much talked about, and we deal with it daily, don't we, when we talk about the up to recently epic performance of US tech and how that translates imperfectly over the Atlantic into Europe, even though we do have big names such as ASML. So we'll focus on Draghi. What does he have to say about the green policies in Europe and how that plays in? Of course, we're dealing with a much changed landscape internationally since the last time Europe thought about this. If you think about China and its role in the global economy, the US Inflation Reduction Act, that caused a lot of panic in Europe. How is Europe going to remain competitive with that kind of incentive in the US?
And European tech stocks are under pressure from the United States in terms of their relationship with China. You've only got to look at what's happening with ASML and the impact that is happening there. Let's talk a bit about the market this morning. So we are seeing softness. Technology is down pretty hard, 2.5% this morning. ASML is one factor behind that, but the chip sector broadly is under pressure. ASML, there's UBS downgrading the market this morning, which is also adding to that. Luxury significantly is also selling off. Energy is down. That's certainly a drag on the London market this morning. So names like Shell are under pressure. We'll see what the JOLTS number delivers a little bit later on. Keep an eye on that. It's the labour market data over the next kind of 3 days that I think is really what the market is now focusing on. We see the sell-off. Now what happens in terms of that data, in terms of whether or not this is a buy the dip opportunity or whether this is something that continues. Do we get 50 from the Fed on the back of this data, or do we only get 25? So it's JOLTS today, claims tomorrow, payroll numbers on Friday. Got to throw ADP into the mix as well.
I'll throw one more in there. We got the beige book tonight. I didn't even mention it, but I think so many people are kind of looking past it because it kind of feels like Chair Powell has almost, in some ways, boxed himself into a corner, saying 25 is what the market is going to see in September when it comes to, or this month. Yeah, I forgot the word September.
Away from the data, just getting some lines from Deutsche Bank. We were talking about German banking a lot because Commerzbank in focus, the government selling down its stake there. The Deutsche Bank CEO is commenting at a Q&A event being asked about this and saying a Commerzbank deal is not a topic for us right now. I mean, how many times have we asked that question?
Volatility's up in Europe as well again today, so you've needed another big spike in volatility. So I just want to put that out there as well. Volatility is not coming down this morning.
Okay, we'll watch volatility, of course. At 9:30 a.m. London time, The Pulse will be speaking exclusively to the founder of HomeServe, Richard Harpin. That conversation coming up in the next hour. This is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate World Cup. This is a three
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
European stocks fall after the worst day on Wall Street since the August meltdown as growth worries fuel a flight from risk. Nvidia's record rout, while worries over AI actually wiped $279 billion from the chip maker's value. That's the biggest one-day loss in U.S. stock market history. Antitrust concerns also linger. Plus, Bloomberg has learned that Cathay Pacific may not be able to put all of its Airbus A350s back into service as quickly as hoped after a parts failure as other airlines carry out checks. So we have a lot of news out today, and certainly the big focus throughout the day, throughout the morning, will be what markets are doing. This is a picture for the European markets map. Now, we're not seeing a huge sell-off, but we are seeing a sell-off nonetheless. You can see the FTSE down 0.7%. A lot of the others, including, for example, the DAX and Milan, there, the FTSE mid down between 1 and 1.2%. S&P futures down 0.3%. A lot of the big focus will, of course, be on tech stocks. The rout that we've seen yesterday took many by surprise. There's a brilliant John Authors piece that says, look, the main worry is that there's nothing really underlying apart from this litigation concern, also antitrust regulation, to support this kind of like big fall that we saw from NVIDIA. The U.S. 10-year yield, 3.808. We've seen a massive move into risk. And then let's also look at VIX and some of the other things that we should be watching out for. You can see VIX 22.37. This is a pre-market for NVIDIA. When you look at the picture overall for NVIDIA, it's actually down 2.8%. Again, yesterday, it fell by almost 10%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, let's start with NVIDIA, which has suffered a record single-day rout. The company saw almost $280 billion wiped off its market value during yesterday's trading session. That's the biggest one-day loss in U.S. stock market history on worries that the AI boom has been overdone. Now, the sell-off continued in Asia. It's left investors in Europe unsettled as well, with all of Europe's main markets in the red this morning. Now, we're joined by Patrick Armstrong, Chief Investment Officer of Plurimi Wealth, and our anchor, of course, and tech expert, Tom McKenzie. Tom, thank you for joining us. Patrick, we called you as soon as we saw the sell-off because you understand you're also, into single stocks. What happened here exactly?
And that's a very good question without a very clear answer. It's like a flock of birds. It's just one of them startled and then they're all flying off. And the PMI number was weaker than expected, but marginally. Prices in the PMI survey were a little bit higher than expected. That doesn't dampen the Fed's cutting potential. So I do think it's profit-taking and a little bit of investors just creating some selling momentum that's self-fulfilling. So I don't think there's anything really fundamental behind the sell-off other than technical factors.
So technical factors, but also, Tom, it kind of got sparked by this antitrust concern. What is that?
Yeah, so there's a couple of things coming to play. And as Patrick was saying, look, the markets seem to be primed for a bit of profit-taking. And then you get a couple of analysts coming out. Before we got the Bloomberg reporting on this DOJ probe, a couple of analysts coming out, including from JP Morgan and BlackRock, warning again about the return on investment for companies like NVIDIA and saying, look, if you're getting these hyperscalers like Microsoft of the world and Amazons of the world spending so heavily on CapEx, you do need to see the services end, so businesses outside of the world of tech starting to show that there are some payoffs then and that they're getting involved in AI. And so far, that's not happening. And so BlackRock as well saying, look, there's going to be patience. This is not going to be a question of months in terms of ROA on these investments, but years. And then you had the exclusive reporting from our team led by Ian King in San Francisco on this DOJ probe. So they've gone from asking questionnaires, informal questionnaires being sent to NVIDIA to get a bit more information, to official requests, legally binding requests, and NVIDIA will have to provide that information now because antitrust regulators in the US are concerned about the role that NVIDIA has within this Gen AI space and whether or not they are squeezing out other competitors and leaving their customers tied into their ecosystem and not having the ability to look at other competitors in terms of options.
I mean, good reasons to worry, but again, it probably doesn't justify a one-day single move of $290 billion being wiped off.
It doesn't. The stock's still up over 100% year to date, though, so there are people who are crystallizing profits as they see some risks emerging.
Is this in a bubble? I mean, one of the things that we were talking also with Tom is that when you look at the earnings from NVIDIA, I mean, they did very well, and yet people were disappointed with the margins.
I don't know how you can be disappointed with those margins because those margins are unsustainable. Eventually, there's going to be competition that are going to push those margins down. But that's why I'm not worried about the DOJ, is that NVIDIA's competitive advantage in squeezing out competitors are the processing power of its chips. And it's not doing anything illegal. It's just producing a better product. And that's what's driving its revenue. And that's what's leading to the profit margins it can generate.
Tom, are we expecting anything from NVIDIA today? Do they come out with statements, or does it just have to run its course?
Yeah, so look, they've pushed back on this. They said the reason that we have this market share, and they have, about 90% market share when it comes to these AI-assisted chips, these GPUs, these AI accelerators, is because our products are just that much better, and our customers are very pleased with our products and our services. But kind of to Patrick's point, it's also the DOJ probe is also a reminder, or at least information gathering, is also a reminder that this is not just a company that produces the chips. It has that whole ecosystem that is proving so attractive to its customers. It has the servers, it has the software, as well as those GPUs. It packages that all together very successfully, and that is very compelling to its customers. And again, these probes, if we get to a point where this is actually an official probe, rather than just official and legally binding information gathering from the DOJ, we know history tells us this takes a long time to play out.
Yeah, I mean, again, the concern is, so there's a subpoena, there's a DOJ, but at the same time, there was this weak manufacturing data. Yeah. And so I don't know how much that played into thinking, well, look, if there's manufacturing data, we see a recession, we see a slowdown in the U.S., that's definitely going to impact some of these stocks.
The bull market is predicated on an economy that doesn't fall into a recession and a Fed that's cutting into that relative strength in the economy. So any indicators that show a recession is becoming more likely or plausible is going to spook the markets. I think it was a very minor miss. Our base case is the economy continues probably sub-trend growth for the next few quarters, but does avoid that recession.
So John Arthur's one of my favorite, actually, writers, Bloomberg opinion writers, wrote in his column today, "Wake me up when September ends." I mean, it's a pretty difficult start to September. Is it going to be bumpy for the whole month?
Traditionally is. You get a volatile September and a rally into year end. That's quite often the path. The jobs number is going to be very important, and that'll guide us whether recession is going to become a base case, because you've never seen a jump up in unemployment like we've had without having a recession, but you've never really come off a base of unemployment being so low before. So that's why I'm still constructive on the economy. Recession's plausible. Don't think it should be the base case. And I do think a cutting Fed, an economy that's not in recession, you want to be in that market that's grinding higher.
Tom, there's definitely a risk-off mood, and I guess the sell-off spread to some of the Asian markets,
Yeah.
you know, the regions, for example, technology, semiconductor, supply chain companies were down, but maybe not as much as they could have been.
Yeah, one of the biggest losers in the European session right now is ASML, of course, taking a big hit, and tech, the last time I checked, was the sector taking the largest hit as well, down the last time I checked about 2%. But as you say, of course, there's a smaller mix of these big tech names within the European space. And to your point around what happened in Asia, yes, that was the trigger for the sell-off, particularly in Japan and South Korea and Taiwan. TSMC, of course, prominent amongst those names that saw pressure as a result of the concerns that filtered through around NVIDIA yesterday. So it has global ramifications, and we're seeing that. But again, to your point, less extreme here in Europe because of the concentration mix that is less potent when it comes to these tech names.
Tom, thank you so much. Tom McKenzie there, of course, our anchor for Daybreak, and our tech expert, Patrick Armstrong from Plurimi, stays with us. Now, coming up, more analysis on the global sell-off. We'll also be joined by Yuko Takano from Pictet Asset Management for a deep dive into what all of this means for equities. This is next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back, everyone. It's definitely a big markets day. We're back with Patrick Armstrong, Chief Investment Officer at Plurimi Wealth, and Yuko Takano, Senior Equities Investment Manager at Pictet Asset Management. Thank you both for either sticking around or joining us. Yuko, what a day. I mean, we've seen a huge sell-off. And again, the underlying reason is not obvious. So is it a buying opportunity, or are you staying away?
I do think that these, I mean, we had this weakness back in end of July, early August, right? And I think it's back again. And I think markets are really nervous because we're really caught in this rut of, you know, if the economy is weak, that's really bad for markets. But the markets also desperately want some kind of a rate cut. So investors can't have their cake and eat it. And so they're in this state of confusion, and that's why we see a ton of activity going on in the market.
I mean, are there, sectors in equities that look more attractive? We're trying to figure out whether this is a bubble or whether we're just going to see this bouts of volatility when investors panic.
I think that we will continue to see this type of uncertainty in the market for a while. I can't say exactly how long, but any type of economic figure like the ISM yesterday or the jobs number on Friday that comes out, that could always lead to volatility. As long-term investors, we invest on a 3 to 5 year horizon, so we're not really bothered by that volatility. Instead, we have, we redo our valuations, we've diversified our portfolio, and we really look for opportunities to invest in these types of markets. They create really good opportunities.
Are you looking at anything specific at the moment, or does it have to kind of play out in the next couple of months?
I think we want to see how it does play out, but having said that, if a particular stock looks really attractive, then we'll go in. So it's really about that gap between what we perceive as their true value or their intrinsic value and where the market sees it.
Patrick, are you buying anything right now, or are there opportunities out there?
There's definitely opportunities out there. Overwhelmingly, the market's expensive, but there are opportunities. We bought Roche a couple of weeks ago. We sold Novo Nordisk. Novo Nordisk, very expensive. It's got the obesity drug that everyone's after, but Roche is showing great potential in its obesity drugs. We bought D.R. Horton with the Fed cutting rates. We think house building is going to get a tailwind in the U.S. That's a cheap company. 3E, Dassault Aviation, we think military spending is going to continue. That's a secular tailwind. So I do think the market's expensive, but I do think if you are picking up companies that have growth potential and are trading below market multiples, that's a winning strategy right now.
The market is expensive because we're also maybe underestimating the impact that, weak China manufacturing data has, or, there seems to be, I can't see anything that you think, this is going to go right. Everything's slightly tilted on the negative side.
Yeah, China is something I'm definitely worried about. We're shorting Kering, luxury plays right now, and we moved into Walmart last month. I do think the U.S. consumer is very strong. I think the luxury high-end China consumer is going to continue to be at risk. All the companies I just mentioned, I'm very optimistic on the outlooks of those companies. Our bullish, relatively bullish scenario is based on an economy that's growing and a Fed that's cutting, about having your cake and eating it too. I do think the Fed's rate is so high, you can get cuts even with economic growth because the policy is restrictive. Inflation has come down. The Fed can be cutting even with economic growth, in our opinion.
How do you see, of course, the Fed is the big one. It's the one that kind of, changes everything. It could be a buying opportunity. But the China macro is also something that markets were expecting, some kind of bazooka that we never had from policymakers.
I think that, even with the stimulus, that's kind of more like a manufactured growth, right? So what we're really looking for in China, although we're not really exposed to China at all, is that kind of more fundamental strength in the economy. And I think with China's PMI being really weak and the consumer not being very confident, this, I think, all links back to the issues that they're having in the real estate sector. So until those issues are fundamentally resolved or there's some kind of glimmer of hope, then we're just going to sit back and wait.
But a lot resides on that jobs number on Friday. Are we expecting too much from it?
The market's definitely going to be fixated on it. I think the unemployment number rather than the jobs number may be the thing that really matters. If you do see unemployment go up to 4.5, maybe I will change my view and think that a recession is becoming a more likely scenario. So I think it's a very important jobs number because it's leading into the Fed, and a couple of weeks after that, it'll be something the Fed will really be looking at as well.
And so there's like a before jobs data, positioning and an after jobs data positioning.
Sure. But within our portfolio, we're pretty defensively positioned. We're long on consumer staples and utilities, and that's helped us throughout this whole market turmoil. And then in terms of the pockets of growth, we do think that within tech, there have been companies where multiples have come off quite a bit. We want to see if there's any other opportunities in that space.
We're 16 minutes into the show, and we haven't even mentioned yen. And what is going on? How much of the unwinding still has to happen of the carry trade?
It's very difficult to say the answer to that. That was the driver of the early August sell-off. It played out a little bit yesterday as well. I think investors who had big positions on, those are closed now. So I don't think that's a catalyst at this point. It's probably still there to some extent, similarly in Swiss franc, but I don't think that's going to be a driver of volatility the way it was.
But you're expecting, I guess, aftershocks.
Yeah, I mean, I think there will be aftershocks, but whether that's going to be due to the carry trade is a little bit uncertain because, you know, we're really not sure to the extent how much has been unwound or not.
I mean, yesterday, I mean, some of the moves, again, so NVIDIA, we spoke, you know, at length about that, but the oil has also dropped to a low for the year. How much of that is, you know, some of the technicals, mechanics, and how much is it geopolitics?
Yeah, so oil had a geopolitical risk premium built into it, definitely. And I don't know why that came off the table yesterday a little bit. It was basically economic-driven, weaker PMIs. Pricing in a weaker economic backdrop creates the sell-off in oil. But I wouldn't want to be short oil, and there's a big short in oil. And whenever the market's all squeezed one way and that geopolitical shock comes, and there's so many things that could trigger that, and that wouldn't be a short I'd want to have on right now.
I mean, does that also, I guess, feed into your transition play?
In some ways, yes, but I think what we're focused in terms of our transition fund is really on the long term and the transition away from oil. So short-term oil price movements don't impact our performance that much, and we do think that, you know, we say that we're looking for transition. It's not like, you know, from day to day, it's all of a sudden going to change from 100% oil to no oil. So that's a more gradual, long-term transition that we are invested in.
I mean, does the transition? I mean, we have the big U.S. election coming. And I think Goldman Sachs had, you know, some of the first modeling of what the presidencies mean for GDP. When's a good time to come in and kind of take some of that into account? The polls are pretty narrow. It's
very close, close to a coin flip still at this point. And yeah, you've got very different policies. You'll have Trump with deregulation, but with tariffs. And you'll have Harris, if she gets in, with more regulation, more spending. Both of them will have massive deficits. And I think that's something that's really going to be a 2025 story is the U.S. deficits and debt. And does populism get you elected, but does it work to drive growth?
All right, a million more questions we need to answer. Thank you both for joining us. Patrick Armstrong from Florimi Wealth, Yuko Takano from Pictet Asset Management. Now, coming up, oil extends losses after a drop of almost 5% yesterday. We took a look at what's behind that slide from the Middle East. That's next, and this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
There's a orderly unwind and a disorderly unwind. The Fed cut is expected. You know, if they were to be much greater or something like that, it's probably going to be a very orderly process as we move back to lower risk-free rates of return, or think about the cost of capital holding oil in the financial as well as the physical, where that's going to begin to unwind.
Well, that was Carlyle's Chief Strategy Officer, Jeff Curry. Now, oil is extending declines after a loss of almost 5% yesterday. The possibility of political unrest easing in Libya is shifting focus back to plans to boost production by OPEC+. Let's get more now from Bloomberg's Anthony Di Paola in Dubai. Anthony, thank you for joining us. So what exactly is behind the oil meltdown?
Hi, Francine. Yeah, we saw that start yesterday after we spoke with the Libyan central bank governor, the one who had been deposed and has left the country, is now in Turkey. He was saying that this outage could reach a close. They are working on a solution to the political crisis around control of the central bank that has led one of the two governments in Libya to cut production and exports from the country. That's taken about 500,000 barrels a day off the market. That's given some support to the market, but as soon as those comments came out yesterday that there could be a resolution to that problem, that's what gave that initial spark to bring us even lower more quickly on oil yesterday. Add on to that concerns about demand in China, potential lower manufacturing results from the United States, and that adds some concern about demand there as well too. So those demand issues on top of this additional supply potentially coming back from Libya, as well as OPEC Plus's plan to increase in October, that's all having that kind of snowball effect, Francine.
So, Anthony, we started from a lot of oil forecasters, I think from JP Morgan, Standard Chartered, predicting a rally to $90 a barrel or beyond this year, or a lot of them now having to change their price forecasts.
Yeah, I mean, a lot of the motivations in the oil market changes. We've seen persistent geopolitical risk that has really failed to break through into consistently higher prices. We've seen those knee-jerk reactions, but because supplies have not been impacted by geopolitical risks here, we haven't seen oil take those legs higher. Instead, we have seen the actual issues, rather than having actual issues around supply from this region, we've seen actual issues around demand in China, asking for more oil, concern also around the U.S., but we have seen additional supply come out of the United States as well as some other countries in the Americas. So that supply picture is looking to kind of overwhelm that demand. So a lot of those investment banks that you mentioned now are looking at surpluses towards the end of this year and into next year, Francine.
Anthony, thanks so much. Anthony Di Paolo there with the very latest on oil. Now, global flight from risk assets, of course, is continuing today. Up next, an exclusive conversation with the founder of HomeServe. That's next, and this is Bloomberg.
Thank you.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. European stocks fall after the worst day on Wall Street since the August meltdown as growth worries fuel a flight from risk. NVIDIA falls pre-market after a record rout of worries over AI wiped $279 billion from the chipmaker's value, the biggest one-day loss in U.S. stock market history. Antitrust concerns also linger. Plus, Bloomberg has learned that Cathay Pacific may not be able to put all of its Airbus A350s back in service as quickly as hoped after a parts failure as other airlines carry out checks. Now, we are getting a little bit of M&A news. Blackstone has agreed to acquire AirTrunk in a deal valuing the Australian data center operator at $16.1 billion. That's including debt and capital expenditure for committed projects. Now, this is, of course, Blackstone, the New York-based alternative asset manager, but they're doing this with the Canadian Pension Plan Investment Board. And again, they're buying AirTrunk from Macquarie Group and PSP Investment. This is according to something that actually came out a little bit earlier on. Now, private equity giant Brookfield closed a £4.1 billion deal last year for UK household repair business HomeServe. It was one of the biggest takeover private transactions in the country that year, with HomeServe's founder, Richard Harpin, and his family making close to £500 million from the buyout. Now, his family office, Growth Partner, now wants to become one of the most active in the UK and is investing in companies weighed towards the consumer sector. Well, I'm delighted to be joined by Richard Harpin for an exclusive conversation. Richard, thank you so much for joining us. First of all, congratulations on the major windfall that you received from HomeServe deal. I was asking you whether your life had changed. Do you feel different?
No, not at all, because I think it's evolution rather than revolution. One of my 8 secrets. And I've remained as chairman of HomeServe, but freed up some time to really focus on Growth Partner, my family investment firm. And it also means that I've freed up a lot of capital, hundreds of millions of pounds, to back entrepreneurs at an earlier stage in their journey.
And so why did you do it? Is it? And I want to come onto your 8 secrets, which is basically what you've learned over your journey as an entrepreneur with then this very successful sale. But you know, what makes you now want to continue investing? Is it the thrill of finding, you know, the next big company, or is it to give back?
I've got a real passion for business. And I went to Harvard for 4 days a few years ago to work out what my career objective should be. I came up with 2 words: inspire, breakthrough. And I hope if you went to any of the guys in HomeServe that really made the business happen, they would say, I challenged them, I inspired them, and we achieved more than we ever thought was possible. So I wanted to see whether I could apply that skill to other entrepreneurs and use my money to take a minority investments, large minority investments, and help inspire breakthrough in them. And these are typically businesses that are making between £1 and £5 million of profit. My investment would be between £5 and £20 million to acquire a large minority and really help them to achieve that breakthrough growth.
I love this. This is like money and mentoring. It feels like a new chapter on the Pulse. We're like Dragon's Den, but better. What are the key secrets that you've learned, the 8 things that would have, I guess, transformed your business quicker had you known it 30 years ago?
I think the biggest mistake in early stage businesses is don't go big until you've proved the model. I was lucky in copying somebody else and finding that magic plumbing insurance model that took us to 8.5 million customers and policies with HomeServe and more growth to come. So don't go big until you've copied, pivoted, found the right model. I think the most difficult of the 8 secrets for other entrepreneurs is hire your replacement. I did it after 8 years. I worked out that I was good at vision and opening doors and growth, but not very good at running the day-to-day business. So one of the messages that I convey to those other entrepreneurs is hire somebody to run the day-to-day so you can then work on the business rather than in the business.
And that's what, from the start? Again, you know, the journey of an entrepreneur when you start, I guess, changes. And so you change as a chief executive
I think
as well.
not from the start, because you need that entrepreneurial ideas, pivoting, copying, finding the right idea. But it took me 8 years before I hired my chief exec, so I'd recommending doing it sort of after between 3 and 5 years.
Richard, when you meet some founders early stage, can you tell who's going to be successful or not?
I think so, and it's number one, it's backing the individual. So I'm looking for what Jim Collins would call level 5 leaders. That's low ego, they're curious, they want to learn, they're passionate about the business, they're hiring great people that are better than them, and they are passionate about the business rather than their own career. So it's those sorts of people. They're persistent, they're courageous, and they're going to confront the brutal facts.
How do you know if they can cope under pressure? Which I know there's a lot of pressure as a founder, and there are very difficult moments always in any journey.
Yeah, I think there will always be pressure, but a great leader, a great entrepreneur will say, I will achieve growth regardless of the cost of living crisis, Brexit, COVID. They will still make their business grow. So it's seeing that inherent determination that they've got.
What are you investing in right now? I think you found something that you think is a bit of a jewel.
Announcing today our first travel investment, which is Host and Stay. We're backing Dale Smith, a great entrepreneur. We're putting in £10.5 million into his business. He started only a few years ago managing a dozen properties, now up to 1,000. And in parallel with my investment through Growth Partner, he's done 2 buy and build acquisitions. So a portfolio of lets in Norfolk and another one in Brighton.
So it's interesting because this is not disrupted. This is not it's an industry that's already been disrupted quite a lot. So you're not necessarily looking for a disruptor. You're just maybe looking for someone with the perfection in execution.
Yeah, and a slightly different model. So the staycation market in the UK is worth about £2.5 billion. Yeah. Dale's got a great model of making sure that the handover between individual holiday lets, we employ all our own cleaners. And that's a really important part of delivering great customer service standards.
What's your take on the UK right now, UK PLC, what the new government will put in place, and whether that spurs and actually spurs a lot of growth in entrepreneurs?
Yeah, my philosophy is whoever the government is, the responsibility belongs to entrepreneurs and to the business community to achieve growth. We only have 7,500 large companies in the UK, like HomeServe. They employ 39% of the working population, 53% of the exports. So we just need to double the number of large companies for economic growth. That's going to come out of the forgotten medium, and Growth Partner is investing in those. We're also looking for co-investors. Yeah. So other entrepreneurs that have made it big, that have got some capital, got some real expertise that want to come in and chair one of our investments and put in a bit of co-investment. So that's a great part of the model.
What's your dream for some of these companies? Is it being a FTSE 100 company? Is it rivaling some of the big U.S. companies that seem to be better at becoming bigger, faster, and richer?
Yeah, I think it's follow my 8 secrets, and you can build a £1 billion business. And do you know how many £1 billion businesses there are in the UK today, with the founder still involved in some way, that was a startup to £1 billion or more? Only 56. So wouldn't it be great if we could have more of those? And I passionately want some of those to come out of our growth partner investments. We've got a great investment team working really hard, supporting those businesses, finding more deals. So it's really exciting.
Richard, thank you so much for joining us. Don't be a stranger. You have to come back to talk to us about some of the great things you find. Richard Harpin, founder and chairman of HomeServe and Growth Partner. Now, we do have some breaking news out of China. China considering cutting interest rates on as much as $5.3 trillion of mortgages in 2 steps to actually lower borrowing costs for millions of families while mitigating the profit squeeze on the banking system. Now, again, we have been waiting for a long time for some kind of bazooka from policymakers in China to try and support the economy, trying to support some of the industries, including real estate, that have been under pressure. This is just another step. It doesn't feel like the bazooka that maybe certain markets or certain analysts were expecting, but it's another step like what we saw in the last couple of weeks towards a more stable and better market. NVIDIA, of course, a big story today. When you look at NVIDIA, it was slammed yesterday. Unclear. I mean, there are a number of concerns, of course, with the subpoena, the DOJ, and then there's that manufacturing data in the U.S. that also worried investors. For the moment, down 2%, 1.8% to be precise, pre-market. Now, let's talk more about NVIDIA and some of the market sell-off with Bloomberg MLive strategist Ven Ram. Ven, I mean, thank you for joining us. When you look at stocks and the volatility, it kind of blew up again. And again, there are 2 or 3 reasons why, but not an underlying shift in fundamentals.
Absolutely, Francine. I mean, that speaks to the jittery market, how valuations have run up so much in such a short span of time, but that even without a major reason, that the markets are selling off big time. I mean, if you look at the S&P 500, the earnings yield is 4.3% something. If you look at NASDAQ, it's just about 3.4%. So if you look at those in relation to the Fed funds rate, those are the lowest earnings yield ever in history. So those valuations are very stretched. And if you look at what some of the smart investors have been doing, like Warren Buffett's Berkshire Hathaway, they've been taking money off the table, even of some of the best businesses they hold, Bank of America and Apple. So that speaks to a market where there are plenty of contrarian signals suggesting that, look, this house of deck, this deck of cards can't continue unsustained, and therefore, investors need to sit up and take notice.
So you're also looking, I mean, they'll certainly, getting up and taking notice. You're also looking at the Taylor rule, which links the central bank's interest rate to economic output and inflation. What is it telling you, Ven?
Well, it suggests that the Taylor rule is suggesting that the Fed has got plenty of room to cut rates because the rate is pretty restrictive. It shows that, the Fed can afford to cut rates at least 8 times in this entire cycle. And some of the banks that have the deepest room to cut rates are the Bank of England, surprisingly, and the Reserve Bank of New Zealand. So those have upwards of 250 basis points to cut rates. The ECB, on the other hand, has got room to go only 130 basis points. So the ECB is not going to be able to cut rates as much as the other central banks. That is going to be a positive for the euro.
Ven, thank you so much. As always, Bloomberg MLive strategist Ven Ram. Coming up, the U.S. charges the leader of Hamas for his involvement in the deadly attacks on Israel last year. We'll give you all of the details next. And this is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Now, the U.S. Justice Department has announced criminal charges against Hamas leader Yahya Sinwar and other militants in connection with the 7th of October attack in Israel. Now, let's bring in Bloomberg's Horizon anchor, Jumana Bersace. Jumana, tell us more about the charges.
Yeah, that's right. So the Department of Justice unsealed yesterday that it had introduced criminal charges on 6 party officials from Hamas, including the current Hamas leader Yahya Sinwar, in relation to masterminding the October 7 attack. And of course, this is the first time that U.S. law enforcement formally call out the masterminds of this attack. The charges that they included were conspiracy to provide material support to a foreign terrorist organization, conspiracy to murder U.S. nationals, and conspiracy to use weapons of mass destruction resulting in death. Now, the timing is interesting here, Francine, because the charges were initially filed back in February. They were only unsealed yesterday, which raises a lot of questions as to why it took the Department of Justice so long to actually unseal these announcements. And the other thing that is worth noting is that even though 6 party officials were accused of these charges, it is estimated that since then, over the course of the time period between February and now, 3 of them are thought to be dead. And Yahya Sinwar himself is thought to be hiding in tunnels in Gaza, but it may have somewhat of an impact because one of the names, Khalid Mashal, is currently residing in Doha. And what this means potentially is that it could allow U.S. law enforcement to apply pressure on those seen to be aiding the organization, and therefore potentially here it could open the door to the U.S. applying pressure on Qatar when it comes to housing one of these political leaders from the Hamas organization. But in terms of actual impact on the ceasefire discussions, Bloomberg have spoken to officials from the U.S. who have signaled that this shouldn't have an impact on where these discussions are going because, of course, it remains a priority for the Biden administration to get this ceasefire deal over the line.
Jumana, thank you so much. Jumana Bersace there, Bloomberg's Horizon anchor, joining us this morning. Now, the Ukrainian President Volodymyr Zelensky has restated a call for air defense systems after Russian missiles killed more than 50 people in one of the deadliest strikes since the Kremlin's invasion began more than 2.5 years ago. Now, this comes as a broader government reshuffle takes place in Ukraine. The country's foreign minister, the latest to submit a resignation following 3 cabinet resignations yesterday. And Elon Musk's satellite internet provider, Starlink, has reversed course and says it will comply with an order by Brazil's top court to block access to X. Now, it comes amid Elon Musk's bitter standoff with the country after a Brazil Supreme Court justice ordered the social media service to be banned as part of a campaign against disinformation. China is one of the biggest sources of finance for African nations, pouring in more than $120 billion of government-backed loans through its Belt and Road Initiative over more than a decade. Let's get straight to Bloomberg's Ondiro Oganga, who's in Kigali for us. Ondiro, China's heavy lending to the continent has been called debt trapping by some. So why is this, and good morning?
Good morning to you, Francine. This is because the volumes that China has been lending to the continent has exponentially grown over the last 2 decades. It went from $98 million in 2000 to about $28 billion in 2016. Of course, because of the COVID-19 pandemic, these lending levels plummeted, but they've begun picking up last year, $4.6 billion. Africans, on the other hand, have high affinity for Chinese money. They've been embarking on mega infrastructural projects, and Chinese money does not come with the same conditionalities as the World Bank and the IMF. The problem is this debt has been accruing, and currently many African countries are in debt distress. Some have even defaulted on their debt, like Zambia, Ghana, and Ethiopia. If you look at Angola, a third of the external debt is owed to China, and this is raising questions on the sustainability of the debt and the volumes that China is lending to Africa.
So how, Indira, was that debt accrued, used, and what is the state of those projects?
Majority of this money has gone into infrastructure project. 120 billion has gone into the Belt and Road Initiative, and some of these projects have been successful. For example, power plant projects in Zambia and Zimbabwe. Some have failed to live up to expectations. If you look at Kenya and Nigeria, their railway projects did not live up to the expectations, and hence $5 billion has sunk. Also, China, through these projects, has been able to build influence, and now they have access to energy and also critical minerals. And so this is almost a catch-22 situations. Despite the fact that there are concerns about Africa and the relationship with China, many of their leaders are in China currently for the forum, and that just goes to show you how deep Chinese influence in the continent runs.
Indira, thanks so much. Indira Oganga in Kigali. Now, coming up, continued disturbances for Cathay Pacific as a lack of engine parts keeps some of its A350 fleet grounded. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Well, Bloomberg has learned that Cathay Pacific may not be able to pull all of its Airbus A350 aircraft back into service as quickly as hoped due to a spare parts shortage. Now, the carrier has taken several jets out of service in recent days after an engine component failure on one of its A350s. Let's now bring in Benny Camel, our global aviation editor. Benny, thank you for joining us. So how much disruption has this actually caused for Cathay?
So Cathay is still working through the backlog from this incident, which happened on a flight on Monday. That sort of led to this cascading inspection. We hear from Cathay that about 90 flights had to be cancelled through to the weekend. They hope to have operations back on by then, sort of by the weekend. So most of these are local and regional flights, and very few of them are actually long-distance flights. So that sort of reduces the disruption. And the good news is, in some ways, that the repairs that they've had to undertake on these aircraft are actually fairly short. It's about 90 minutes. You open up the engine, you don't have to take it off. The part that needs switching, it's something that has to do with the fuel supply, is fairly easily accessible. So all of these things point to an issue that can be contained.
So, Benny, has this caused disruption for other airlines as well?
Other airlines are sort of leaning on Cathay and asking for advice. That's what we're hearing. And some of them are inspecting their fleets. Singapore, which is the biggest operator of this particular aircraft, they've undertaken checks. They've found nothing so far as far as we know. Other big operators include Lufthansa, Qatar Airways. So far, nobody else has come forth and said, we've found similar issues, which is a bit of a head-scratcher, I'll be honest, because you'd think that this is something that goes beyond just Cathay's issues. But so far, nothing. It might be that they have found something and they're quietly fixing it as part of a maintenance cycle. That part we don't know. But so far, publicly, nobody else has come out, so the disruptions are really only on the Cathay side.
So what's the fallout for Rolls-Royce and potentially Airbus?
For Rolls-Royce, we saw the fallout quite brutally on Monday when this first came out. The stock dropped quite dramatically on that day. This is a stock that's really done incredibly well for investors this year, and in particular last year. So any piece of bad news sort of disrupts that story. The stock, as I said, down more than 8% on Monday at one point. They have come back because I think investors are looking at this and are saying, okay, this does look like something they can contain. It's a problem, not great, but it's sort of a day-to-day thing that happens, and it seems that they have a handle on it. For Airbus, same thing. If this were like a material issue for their A350 jet, that would be a real issue for them. That doesn't appear to be the case. So overall, it seems that the industry at large has dodged a bullet here, and they can move on from this.
Benny, thank you so much. Benedict Camel there, Bloomberg's global aviation editor. Up next, to Bloomberg Brief with Danny Berger and Manish Krani in New York. A global flight from risk assets seems to be continuing today, this Wednesday. This is after we had fears yesterday about the U.S. economy and, of course, a retreat from big tech. This is Bloomberg.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning from our global headquarters in New York. I'm Manus Graney alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
A record wipeout. Global stocks tumble. Nvidia races $279 billion. Now, a DOJ subpoena. Under pressure, oil extends its decline. Fragile demand and restored supply wipe out all of this year's gains. And Jolt set to kick off this week's run of jobs data, leading all up to Payrolls Friday. Good morning, Manus.
Danny, good morning. It's almost deja vu from the start of August. You're looking at a collapse, the worst start to the NASDAQ trading since 2002. It definitely is a redux, and it has that sense of peak panic mode. Just look at NVIDIA. It's down another 2% at the moment. It's a crushing blow, down $279 billion and change yesterday. What is it that really sparked that sell-off? Is it a spook about the AI conversion into money? We'll talk about that with Dan Ives a little bit later on. And then a 1-2 punch after the close, the DOJ delivers a subpoena, again, escalating the antitrust issues around that. So it was a classic risk-off mode in equities. Money was driven into the bond market. So the risk bears were emboldened and the bond bulls were also emboldened as well. By the way, the Atlanta Fed comes in at just over 2%, down from 2.5%. We'll debate the growth numbers. And oil cascades low. We are in peak panic mode, really, one could say, in the equity and in the global growth story. Danny, good morning.
Good morning, Manus. I do think it's an interesting debate to ask, why did that sell-off even happen? It had some of the maybe echoes of August 5th, where you had a weak ISM really kickstarting things. But it's hard to argue that a weak ISM is worth NVIDIA dropping some 9%, considering NVIDIA isn't even a manufacturer. Maybe it is just the vibes of September.
It is. I mean, we debated this from when we got here this morning as to what is it that can constitute a near 10% drop in NVIDIA. Is it that we need to seriously review the outlook for AI? Either way, I think what it is more of a panic escalation. We're going to get jolts today, panic escalation towards Friday, which will perhaps change the narrative about whether it's 25 basis points or 50 basis points. And maybe you do need 50 basis points to continue the growth trajectory for equities. Maybe.
It is certainly a scared market, a fragile market. If you have something like NVIDIA moving nearly $300 billion in one day, it is extending its decline pre-market, as Manus mentioned, down some 1%. So first we get the panic of yesterday, the everything sell-off. You add a little bit of it today, this DOJ subpoena in an antitrust probe. Let's get over to Bloomberg's Tom McKenzie on it. Tom, just give us the details of this probe.
Yeah, look, as you were outlining there, then a double punch for NVIDIA with the market moves that we saw yesterday as well. Part of that arguably fueled by some analyst calls from JP Morgan and BlackRock around how long it's going to take to get that return on investment around generative AI. And then the reporting from the team at Bloomberg in San Francisco around this DOJ probe. They've been sending in questionnaires to NVIDIA. Now they've been sending in these legally binding requests, these subpoenas for information. NVIDIA has to hand this information over. And what it signals is that the DOJ are one step closer to a formal probe and investigation of NVIDIA. Concerns amongst antitrust regulators then in the US at the Department of Justice that the clout that NVIDIA has within the artificial Gen AI space is too significant, that they have a grip on this market, that it isn't allowing some of their customers to have the ability to switch up and look at some of the competitors. NVIDIA, of course, pushing back on this, saying the reason we are so successful is simply because our products are so much better and because our services are so much better. But you expect this, of course, to unfold in the weeks and months ahead. This could be a long, drawn-out process, but as you say, it's another headwind, at least for now, for this stock.
No irony then, Tom. You know, the moat, the whole defense around NVIDIA is supposed to be the unique product proposition, and you pay to play with uniqueness. We've got breaking news on Intel. It was just a few weeks ago that the president, along with Pat Gelsinger, was ringing the bell in terms of money for Intel. This morning, breaking news, of course, that because of the strategy potential change at Intel, that may throw some of this funding into question.
Yeah, look, the timing of this is pretty fascinating, isn't it? As you look at what's happening with NVIDIA and the DOJ probe there, and then Intel, which just a few months ago, of course, the CEO, Pat Gelsinger, had been on the ground at one of their factory build-outs with the president, President Biden, of course, announcing $20 billion, almost $20 billion in incentives. They have not yet received that cash because, of course, the government isn't handing over this CHIPS Act money like candy to children. They want to make sure that these companies involved in the chip space are actually meeting milestones, that they have the due diligence in place. And so far, Intel hasn't met those metrics needed to release that funding. It's leading to tension between Intel and between the government. But just for the outline, for the top line view, Intel is absolutely central to this industrial policy of the Biden administration to get, for example, a flow of chips, reliable flow of chips to the Pentagon, to get the US in place by 2030, to producing about a fifth of the world's advanced processors. Intel is central to that plan so far because of the cash burn, because of the fact the stock is down around 50% year to date, because of the fact they haven't been selling nearly as many chips as many had expected, and the cost of the build out of these factories everywhere from Ohio to Oregon. It is really now a big question mark around Intel and whether or not you can get this cash and the funding, these incentives from that CHIPS Act.
Tom, thank you very much. Tom McKenzie there with the very latest on the tech stocks. Stay tuned. We have a conversation, Danny and myself, on NVIDIA and the tech right with Dan Ives from Wedbush Securities a little bit later this hour. Other headlines crossing on the Bloomberg terminal at the moment is on VW. They say that its manufacturing output in Europe is over capacity by 500,000 cars, amounting to 2 plants worth of production. The German automaker also sees industry demand in Europe below its peak by 2 million cars. For more, let's get to our German bureau chief, Christoph Rauwald. Christoph, good to have you with us on this story. So the VW executives are having a closed-door meeting, as we understand it. These headlines are coming from that meeting. It's quite a serious picture in terms of the demand and overcapacity.
Yes, absolutely. You're right. This is definitely a pretty dramatic development. The meeting that you just mentioned is still ongoing. We got a readout from people in the room basically suggesting that the top labor representative from Volkswagen, Works Council Chief Daniela Cavado, launched some pretty harsh attacks on the management board, basically accusing them that they didn't do their job properly, and that this is also that this contributed in no small degree also to the currently really difficult situation. At the same time, the management board responded and basically mapped out what you just flagged in terms of the sort of persistent issue of overcapacity, which amounts to 2 factories in Europe, which is obviously quite dramatic, really.
Christoph, to what degree is this a VW problem? Is it mismanagement from VW versus all European car makers dealing with things like changing to EVs and competition from China?
I think it's a combination, really. It's to some degree, I think the argument is fair to say that the European car market did not rebound after the pandemic to the degree into the volumes that we've seen before. At the same time, there are also some structural issues that are very Volkswagen specific, essentially. It has been for many years a big concern among investors that the structural inefficiencies, high costs, poor efficiencies have not really been addressed. So in terms of profitability, the core Volkswagen brand, the domestic operations are still lagging behind rivals like Stellantis and others. And at the same time, as you mentioned, the competition is also intensifying because we've seen many Chinese manufacturers pushing into the European market with electric cars for very competitive prices, and that's sort of adding additional pressure on Volkswagen as a company and the industry as a whole.
Do you think these lines add to Oliver Bloom's argument about closures in Germany?
It's really difficult to tell at the current point in time. At some point, there will be, or there has to be, I guess, a situation where management and the unions come to some sort of compromise and a joint solution to all this. The labor unions at Volkswagen, they can block important company decisions like factory closures. And yeah, this is going to be, I think, a pretty few intense weeks, if not months, before they can actually resolve that and then agree, ideally, on a joint way forward.
Hey, Christoph, we really appreciate it. A lot of breaking news to get through this morning. Bloomberg's Christoph Raould. Now let's get to some of the other top stories that are trending on the terminal this morning. And the big airlines in Asia are undertaking checks of their Airbus A350s. Just to remind you, earlier this week, Cathay Pacific discovered an engine component issue mid-flight on theirs. So far, no other carriers have publicly said that they found issues, but Singapore Air said it would inspect all engines. Air China, for their part, canceled 4 domestic flights scheduled today.
NVIDIA CEO Jensen Huang's wealth slumped by about $10 billion to just shy of $95 billion on Tuesday. The drop was the biggest single-day dollar drop for him since 2016. The losses come after a rout in the chip stocks and a report that the U.S. Justice Department has subpoenaed NVIDIA as part of an antitrust probe.
Tiniest violin. Okay, Elon Musk's satellite internet provider Starlink has reversed course. It said it would comply with an order by Brazil's top court to block access to X. Previously, it had told the country's telecom watchdog that it wouldn't comply, according to the agency.
Coming up, we'll drumbeat to the JOLTS data with Paul Donovan from UBS. That's next.
And we're going to have more on the tech route. We'll speak with Keith Lerner of Truist and Dan Ives of Webbush all this hour.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
It's Bloomberg Brief. I'm Manish Granny alongside Danny Berger in New York. We're counting down to the first jobs data in the jigsaw this week. The JOLTS, the job openings at 10 a.m. Eastern. That's after the manufacturing PMI data fell for a fifth straight month. That was yesterday. Joining us now is UBS Chief Economist Paul Donovan. Paul, good to see you this morning. Thanks for joining us both. One could say this economy in the United States of America, it is not falling off a cliff, but there's a very outsized attribution to yesterday's market action on slightly weaker manufacturing data. State of play for you in USA Inc. Good morning.
Morning. Well, look, the US is clearly on course for a soft economic landing. Growth will be at a bit below trend. We're not seeing significant increases in fear of unemployment or levels of unemployment. Consumers are still spending. You should never ever bet against the U.S. consumer. It's okay, basically. And this looks like more or less a soft landing. Yes, the Fed is late in cutting rates, but it's not desperately late. It's not done serious damage, just moderate damage. We're okay, basically, in the United States, I think.
And Paul, you write about this idea this morning that the Fed doesn't need to be concerned with financial market moves. It's this idea that we often think we're more important than we actually are in dictating policy. But I can't help but wonder, Paul, if it wasn't for the tremors of last month and maybe even what we're starting to see this week, would the Fed really be considering 50 basis points?
I'm not sure how actively the Fed is considering 50, to be honest. I think that they're probably going to go for sort of a steady pace of easing at around 25. And remember, the Fed is late. Powell has made a series of policy errors over the course of the last 2 years in particular, and they should have been cutting back in May. So the idea that perhaps they go with a bit of a bang at the start, they recognize that, yes, we got it badly wrong on inflation. We should have been following inflation down earlier. Absolutely, that's all fine, but I don't think that that's necessarily the market reaction that is provoking that, because, of course, the market's been bouncing around all over the place, and the Fed has sort of fairly consistently now been signaling the September rate cut coming. So I don't think it's necessarily in response to financial market moves.
Do you think the adjudication of whether it's 25 or 50 basis points in September is solely down to the jobs data on Friday? Adam Posen said in a podcast recently, the labor market is first among equals, but there are other things.
I think the jobs data is going to have probably an outsized influence. Of course, this is where economists get quite nervous. I'm talking about proper economists, not people like Powell, where the reliability of the jobs data has deteriorated noticeably in recent years. So the idea that the decision about whether to go 25 or 50 basis points in September based off a single jobs report, which is going to be revised massively over the coming months, that makes me a little bit nervous. What we really need, and it's too late for this now, what we really need is Powell to have set out a policy framework, a medium-term strategy for how the Fed is thinking about the economy, and then we wouldn't be dependent on single data items. But because we've had this nonsense mantra of data dependency at a time when data reliability is falling, it means that we have outsized influence to single numbers. So I think, in an ideal world where economists were running the Fed, we wouldn't be dependent on a single employment report. In the Powell Fed, we probably are.
Yeah, I mean, look, it's a criticism we've heard before, right, Paul, that Powell comes from a background of law, not necessarily economics, and you're talking about what they should do, not what they will do. So in a world of what they will do, what constitutes a bad jobs number on Friday that seriously puts into contention 50 basis points?
I think for that, it would probably have to be the unemployment rate. And I think there will be some attempt to look at the detail of that. So if it's unemployment because you're getting increased participation in the labor force, in other words, people aren't actually losing their jobs, you're just getting more people coming in, that is something to downplay. But if unemployment goes up because people are actually losing their jobs, then that's going to be a more serious consideration, I think. Now, why focus on the unemployment rate? Why focus on people losing their jobs? Because that creates the risk of a fear of unemployment. And it's the fear of unemployment that does most damage to consumer spending, consumer confidence, and so on and so forth. So that's where I would have my focus. Payrolls, yes, and we've just had big revisions to the payrolls numbers. I'm less focused on the payroll side of things. I think it's more about the unemployment and the fear of unemployment that's going to be driving that decision from the Fed.
Typically, how much distance do we have between fear of unemployment and a negative feedback loop on consumption?
Well, I think at this stage of the cycle, you've got probably quite a short gap between the two. If you're at different stages of the cycle, it can be quite a long gap. But what we've got to remember here, of course, is that in the United States, until fairly recently, savings rates were coming down. Now, middle-income households still have a stock of savings, but the point about fear of unemployment, you start to question, do we have enough money to deal with the contingency of losing a job? Is that something that is sufficient, or do we need to add to the stockpile of savings? Of course, if you're adding to the stockpile of savings, you're not buying Taylor Swift concert tickets. And that, of course, then constitutes a consumer crisis in the United States. Now, we also have to bear in mind that there have been some other shifts going on in the labor market. So in particular, for example, women are getting better paid jobs, and this is a result of flexible working. So that's some reassurance of a household income. That's a mitigating factor. We've seen people taking multiple jobs. You've got people with side hustles, selling on eBay, and so on and so forth. So there are mitigating factors this time which sort of complicate it. But I think that a genuine fear of unemployment from middle-income consumers would translate through into spending more rapidly this time.
I really think we need a new measure that helps account for side hustles. Paul, we really appreciate your time this morning. It's always very interesting to hear your take. Paul Donovan from UBS. Okay, coming up, a look at what else is making headlines around the world. There's that also includes a shakeup happening at the top of Ukraine's government in a precarious moment of the war. That to come on your brief.
Top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are marked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
It's Bloomberg Brief. Danny Berger and Manish Cranny in New York. Let's get you some front page news, a look at what's making headlines around the world. And we start with the FT. More issues for getting more home supply on the market. U.S. home builders are facing a credit crunch. Banks are cutting lending. Banks saw the largest year-over-year drop of loans outstanding to fund construction in over a decade. Just to give you the exact figures, $92 billion at the end of June is what loans totaled. That's down from $102 billion a year ago, man.
Yeah, let's keep an eye on that housing market. It is part of the policy mix from the various politicians. Next up, New York Times. It leads with Ukraine's foreign minister offers to resign. Now, this says Zelensky plans a major shakeup. At least 6 cabinet ministers have resigned in the past 2 days, and a new list of ministers to be presented tomorrow.
And meanwhile, we're getting more outlines, more contours of a potential Harris presidency business plan. Harris to expand small business tax relief to boost startups. We have this on the Bloomberg. The Democratic candidate is said to be proposing a 10-fold increase in deduction for startup costs, so from $5,000 to $50,000. And tax is so part of the conversation, Manis, because those tax cuts are slated to expire in 2025, the Trump-era tax cuts.
I mean, that's a heck of a ramp up. It costs about $40,000. I think in the article it says about $40,000 to set up a small business. And what you got here, she's going to set a new goal, which is to get 25 million small business applications in, even though under the Biden administration you have had 19 million and a pretty good record. So this is about grossing up small business America.
Well, big picture, it leads to this question: which party is the business-friendly party? And I think there's a lot of confusion on this. Sure, Harris wants a higher corporate tax rate, but you have things like this of reduced taxes for small companies. And on the other side of things, you have Republicans, a typically pro-business type of government, wanting more tariffs, and a VP candidate who likes more regulation for companies. So you get this confused picture of who is the pro-business party.
Well, I think what she's going to do in New Hampshire today is try and sort of set that stall out and progress on from the housing, from the groceries, from the childcare, and sort of extend the narrative forward. And that takes us back to the Goldman Sachs narrative. We'll talk about this a little bit later on, which is, you know, if you get a Trump or a Harris administration, what's it going to do for actual growth in this country? And that is a huge debate from what you previously thought under a Republican administration. We'll talk about that before the end of the show.
what would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger, alongside Managed Cranny. Let's set your agenda.
A record wipeout. Global stocks tumble. NVIDIA erases $279 billion. Now it faces a DOJ subpoena. Under pressure, oil extends its decline, fragile demand, and restored supply wipe out all of this year's gains. And jolts set to kick off this week's run of jobs data, leading to payrolls Friday. Danny, good morning. These markets are nervous and perhaps a touch of deja vu.
Yeah, what a strange market when you can get ISM manufacturing, when you get manufacturing that accounts for 1/10 of GDP, setting off a chain of events that eventually sees the biggest wipeout for a single stock on record. 279, you mentioned this number, Manis, billion wiped out from NVIDIA in a single day. NVIDIA is not in manufacturing. Maybe it is the seasonality concerns, maybe it is oil, maybe it is simple and plain just vibes heading into the jobs report. We fall about 1/3% this morning. NVIDIA down, you can see there, about 1% pre-market. It now has a subpoena to deal with from the DOJ. Meanwhile, U.S. two-year yields, they continue to fall another 2 basis points this morning. Your two-year yield yesterday closed at the lowest level since the regional banking concerns of 2023. We are now pricing in more than 100 basis points for the totality of the year from the Fed. Meanwhile, NYMEX crude attempts to make a comeback. It fell some 2% yesterday, maybe a little bit more than that. Concerns about demand, concerns about China. And again, Manis, maybe that fed into the overall concerns about yesterday, or maybe it was just because we rallied on Friday and today, and this week is a big week and we're just nervous and decided to sell everything.
Yeah, exactly. A few more sellers rather than buyers. I mean, the really, really technical approach. But it did have a sense of peak panic when you saw that nearly $300 billion wiped off the value of NVIDIA. And I think this brings the much broader debate, is how much farther and further can equity markets run higher here in the US with a muddling through, let's say a muddling through, I think that's what Neil Dudder called it, and muddling through policy response from the Fed, which is incremental, sort of like piecemeal 25 basis points. You know what? Look large, lump up, look large, do it hard, do it heavy, front load it, get it out there, 50 basis points. And that perhaps can underpin the equity market.
Or does it do the opposite? Because this is one argument out there. If you go 50 basis points, it signals that the Fed thinks something is wrong and that they need that kind of support. And this is an equity market that has switched to bad news being bad news. So 50 basis points could spook markets.
Yeah, then you listen to Paul Donovan, of course, who was scathing. It would be an understatement in terms of the Powell policy response process mechanism and timing. I mean, he was visceral in terms of Powell's being behind the curve.
I think he mentioned Powell's not an economist maybe 2 times in the span of a minute.
It was a tough recap, gotta say.
Well, in yesterday's sell-off, as we said, it was a lot of tech stocks. The semiconductor index had its worst day since 2020. Of course, into that, it's been a pretty interesting year from tech stocks. We are now down just 8% from the July peak. Here's what Keith Lerner of Truist had to say. He writes, after downgrading the technology sector prior to the July swoon, we moved the sector back to overweight last week as we see a better risk reward relative to other areas of the market. And Keith joins us now, the co-CIO and chief market strategist at Truist. So Keith, you got that August call right. You went back to overweight after that sell-off. So did you want to buy yesterday's dip?
Yeah, well, first, great to be with you. I think time frames matter. So if you have, let's say, a 6 to 12 month time frame, the answer is yes for tech. As we look at the big picture, first of all, I called a lot of my context news. There wasn't anything specific during the day that we could really point our fingers to for why tech was down so hard. Besides people coming back from the Labor Day weekend and really reassessing their earnings report from the previous week. But the main thing that we look at when we look at tech is the earning trends relative to the overall market. And when the earning trends for tech is stronger than the overall market, it tends to outperform, going forward. So as we look at the trends right now, we have not seen any break. The technology sector earnings relative to the broad-based market just made a new fresh high. And if the economy is cooling, we expect that likely will continue.
So if that's the scenario on the earnings, Keith, then it must follow that on these sort of dips, so you look at all of the chip stocks, you look at NVIDIA, it's a little bit lower this morning, that it is a natural incrementally buy the dip on a scaled basis, on an incremental basis, you just add on these dips?
Yeah, I think it's scaling because at this point, it's premature to say that this pullback that started yesterday is done. We're not seeing on most of our metrics now, unlike early August when we upgraded the sector, it had the worst 1 month underperformance since 2002. We're not in an oversold condition yet. So the way we think about it is we think the primary trend is still positive. You maybe have to go a bit lower first. So scale into it, not trying to be a hero calling the exact bottom, but saying, hey, do we think the AI cycle has further to go? And as we get deeper into the fall, I think there'll be more discussions turning back to AI, meaning Apple will come out with their new iPhone. I also think, there will likely be a PC upgrade cycle. I don't know about you all, but the PC I have at home is about 8 or 9 years old, waiting for some of this new technology to be moved in there. I think you're going to see that as well. And again, if you're going into a slowing economy, companies are going to need to continue to invest in technology, otherwise be left behind.
Fair enough. And Keith, even though tech sold out, everything sold off yesterday. You had Russell 2000 fall by some 3%. An equal weighted measure of the index fell just by 1%. You had some of the defensive plays do better yesterday. Real estate, a bond proxy, did better. The staples, they gained yesterday. Utilities fell by only 0.1%. So even though I understand you're overweight tech and you see some promise there, do you see a shift in the market leadership where it's not just tech that is rising?
Yeah, I think at least short term, you're certainly seeing, even the last month, if you look at the market, the S&P was up last month, but is really led by the defensives. You see the 10-year Treasury yield coming down. So the tone of the market on a short-term basis has changed. And I think that's reflective of this growth scare. And the reality is this, whether the economy is slowing down or, let's say, something more sinister like a recession, the transition is sloppy and it feels weak. So it's not, abnormal to see this kind of transition. Our base case is that we're not going into recession. So we think we'll have this growth scare. And then as we get out of this growth scare later this year, as the Fed starts moving or cutting rates, that we'll see a rotation back. But I think in the short term, I think it's likely to continue. The other thing, I think perspective is helpful. We were up 9 of the last 10 months. And we look back historically since the 1950s, following that, after being up 9 of 10 months, the next month is only up 33% of the time. So we already know everyone's talking about September, the seasonal headwinds, but we know September and then into the election, into the election as far as September and October. October tends to see a spike in volatility as well. So it's likely going to be, sloppy here for several weeks, maybe a few months into the elections.
It's a nice way to refer to it, a sloppy transition. Commodities are having more than a sloppy transition. They're having a brutal sell-off. In that sloppy transition, what's the outlook for the commodity side of the equation?
Yeah. So, I mean, listen, commodities have been under pressure for several different reasons. One is more supply coming online, but also the global growth numbers, I mean, from China. And then you all talked about this earlier, the weak ISM number. I will say, though, I mean, the ISM manufacturing gauge has not been that great as far as predicting the economy. It's been sub 50 for 21 out of the last 22 months. But all in all, you are seeing just things that are cooling. And I think that's what you're seeing in oil. I will still say, as you're getting closer to the election, having a small position in commodities or oil, I think still makes sense because there's still a lot of political uncertainty. And typically those things happen, they're very acute. They happen in 1 or 2 days. So having a small position, especially as they're, $69 and change on crude oil, I think makes sense.
Okay, Keith, thank you so much. We get ready for a little bit more of the sloppy transition. Keith Lerner there of Truist, his calls on the markets. Coming up, NVIDIA shares off the session lows ahead of the market open. We dig into the chip maker narrative with Dan Ives from Wedbush. Context Matters on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's Bloomberg Brief. I'm Manus Granny alongside Danny Berger here in New York. Stock in NVIDIA still firmly in the red, pre-market trading. That's after a double whammy of a historic right and a subpoena from the U.S. Justice Department. Joining us now is Dan Ives, Senior Equity Analyst over at Wedbush Securities. Dan, you're on a tour. You're in Asia at the moment. We know that. We'll come to that in a moment. Stock down 9.5% yesterday, lighter on its feet this morning. $278 billion of a wipeout. Why? What was the trigger, or was it just some kind of an August redux?
Yeah, look, I think there's just fears in terms of growth, not just from NVIDIA, but I think across semis, and that's why you just saw a disaster day, for just the whole semi-food chain. But I just look at it, has anything changed? And look, that's why we're in Asia the next few weeks. Nothing's changed from a demand perspective. Demand continues to way outstrip supply. And then you look at earnings, I think it was sort of a muted reaction. But I think we take a step back, and this is a story where the demand continues to ramp up from an AI perspective. Blackwell delays, put to rest. I think these sell-offs, in my opinion, are buying opportunities, not the time to panic.
I just wonder, Dan, if an antitrust probe, if that escalating from the DOJ, this subpoena, if it hits your registry of concern at all for NVIDIA?
Yeah, look, I think you have to put in the context of broader tech. I mean, Apple, of course, Google, have another trial next week. I mean, that is just sort of the tone in the Beltway. I mean, we are just going to see some of those drum rolls. Look, we're not too concerned about this for NVIDIA. I think just because when you actually look at what's happened here from an execution, the reason that they've essentially dominated it is just because how stellar the execution has been and how they've just been so far ahead. AMD and others will ultimately get into this sort of race. But I just view this as more of a scarier headline than the reality. And also in the context of what's happened in big tech, NVIDIA is just part of the club that continues to be part of that pressure, Beltway versus big tech.
Part of the accusation is that it's harder for suppliers to switch, it penalizes buyers. What is the worst case scenario here? Is it a chip, a mini chip or fissure in the moat, the grand moat around NVIDIA?
Look, the moat is what Jensen and NVIDIA have created, right? I mean, and that's not going to change. And I can almost take the other side. Okay, DOJ is looking into this. Rather look into this, give some sort of all clear so it's not a concern. I mean, look what we've dealt with the likes of Apple, Google, Amazon, some others for a number of years. But I don't think it changes that. And I think the reality is they are the only game in town. And nothing's changing that. From an innovation perspective, when you talk about $1 trillion of AI CapEx over the coming years, where NVIDIA is going to get a significant piece of that.
In just this political climate, though, Dan, where you have two candidates and their vice presidents who almost feel like it's a competition of who can have the most populist policies. And then you look at something like Google getting slapped for antitrust violations, too. Is this a political climate that maybe you need to take a second look at some of these big tech names that we thought were safe from antitrust regulation and scrutiny, and maybe this time is different?
Yeah, look, I think it is a little different. I mean, look, Apple, we'll see that over the next, call it 12 to 18 months. But I think after that Google win from the DOJ, I think the climate does change a bit. But I think the reality, look, we've talked about it on the show, strong have gotten stronger. I mean, you talk with your previous guys about Mag 7 and big tech. That's not going to change. In other words, big tech are going to get stronger. And I'd argue with AI revolution, that's actually accelerates. And we'll see next week, when Apple launches iPhone 16. So to me, it is changing of the climate, but I think it just speaks to just tech is just going to become a bigger and bigger piece. And big tech, even through M&A, I think that's going to be the biggest variable. FTC Con, where that all goes depending on political climate. I think it's all added to some of the agita as once September hits, going into the elections. I think that's also some of the sell-off that we've seen, just some of the nervousness going into the fall.
Well, Dan, you're in Asia at the moment. Part of that trip will involve, I presume, seeing people that feed into this supply chain. Two things I want to know about is how do they see demand holding up? You got the iPhone launch coming up. And secondly, how much conversation are they having around the political change here, the risk of new tariffs towards Asia?
Yeah, great questions. I mean, look, the reason, there's a second trip to Asia in the last month, got to see where demand is, right? I mean, you're not going to find it in the spreadsheets or 10th floor of a New York City office building. But from an iPhone perspective, I mean, units, iPhone 16 originally started 84 million. It's above 90 million. And that's bullish in terms of what we believe supply chain's indicating in terms of what will be an AI-driven super cycle with iPhone 16. And I still believe an underestimated demand cycle that's going to play out for Apple. But then, you talk about just broader demand. Demand continues to tick up, not tick down. And I think the tariffs and some of the U.S.-China cold tech war, that is a worry. And I think that's the probably biggest question from investors that we meet in terms of going to November. What does each candidate mean in terms of, the quote-unquote AI trade in terms of Trump or Harris?
Are the companies taking actions now, Dan, to try to protect themselves in that case, or are they waiting to see the result of November?
I think it's results. And look, the reality is there's a limited amount they can do because of just the vast majority is coming out of, China and coming out of Taiwan, coming out of the region. And that's not going to change overnight. But, to what I think we saw with the sell-off, it just speaks to some of the broader worries. Nothing's changed fundamentally.
Yeah.
We continue to think valuation, these tech names, numbers will continue to move higher. But it's some of these white knuckles going into September, going into the election, that I think you're seeing, some of the softness in big tech. But I don't view it as anything more than that. I think a lot of these names continue to move higher into year-end 2025, despite, obviously, I'll call it a white knuckle or an adjective period.
Look, we know you're an evangelist of NVIDIA, Jensen Huang. We understand that position. Do I now need to look at my investment in NVIDIA as two portions? One is a long-term investment, and the other portion of my participation in investment is trade. 10% swings, 5% swings. It's split in two now.
No doubt. Look, we've said you're going to have to put the seatbelt on in tech. I mean, this is not going to be a smooth ride. Pilot's going to be coming on saying turbulence, put on the seatbelts. Okay, so the point is we are going to see that. And I think you have to be ready, but also that creates the opportunity as well. Just like we saw on Black Monday in Tokyo and what we saw yesterday and potentially over the coming weeks, that creates the opportunities, but there will be volatility. But I think in the end, they're growth scares, and I think we look at these as more opportunities rather than the structural change, as many of the bears are coming out of hibernation mode.
Dan, before we go, got to ask, do hotel rooms in South Korea come with their own Penn State Nittany Lion swag?
They do, especially after just that domination in week one. It's surprising what you see. I think Big Ten is starting to become global.
It's a global phenomenon, as are you. Dan Ives, thanks so much for joining us. Dan Ives of Wedbush Securities. Okay, a quick market check. You are looking at 2-year yields continuing to move lower, trading at about the lowest so far of the year. NASDAQ under pressure, as is NYMEX crude, down about 0.2% after falling yesterday. Some big losses. Let's bring in Bloomberg's Will Kennedy on this, the executive editor for commodities. Will, why the tantrum in oil yesterday?
I think it's a combination of several things. The immediate catalyst was an interview that actually Bloomberg did with the Libya central bank governor, which suggested that a solution to the problems that we've seen in that North African oil producer may be closer at hand than people expected, potentially bringing 500,000 barrels of oil a day back to the market. And then you combine that with a realization as people got to their desks after the summer holidays that OPEC was indeed likely to proceed with an increase in production and continuing worries about the strength of the Chinese economy. You put all that together and it turned out to be a pretty bearish brew. We saw quite a lot of trading both on futures and options and yes, quite a sell-off.
How would you describe, well, good morning, how would you describe the physical market in terms of the draws, the drawdown in the physical market? Because that's going to be what OPEC Plus are focused on, isn't it?
Yes, and I think the picture that we've seen is that the physical market has, as many people expected, looked fairly tight over the summer months, that probably global inventories have been drawing down, that demand has been very good as people traveled, they drove on holiday, they flew on holiday, but there's an increasing expectation that that will wane a little bit as we get into the last third of the year, that we will see this extra OPEC crude in the fourth quarter, that we are facing a very weak Chinese economy, and you put that together and I think that people are expecting inventories to build perhaps at a faster pace than they did. And then you add to the fact that most forecasts for 2025 really do look like we may be facing a period of oversupply, and that's what's fed into this situation.
Well, the oil market's having its very own taper tantrum, that's for sure, as soon as that OPEC supply comes back. Well, thank you very much. Will Kennedy there on the oil markets. Coming up, awaiting more data and more of a guidance on the rate path. Context Matters on Bloomberg. Good morning from New York.
is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
You're watching Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. We're going to get some retail earnings before the bell, including Dollar Tree and Dick's Sporting Goods, plus more economic data. JOLTS will hit a little taste of jobs to come. Factory and durable goods, those come out at 10 a.m. Eastern. And then we'll get the beige book from the Fed, Manus. That comes out at 2 p.m.
A couple of individual movers to keep an eye on, Danny. We're counting down to the market open on NVIDIA. We bounced off the lows. We were down 1%. But certainly what you've got is a taper tantrum in the oil market. Risk off. Took money into the bond market yesterday. S&P down by 0.3%. This is the worst start, by the way, for some of the tech stocks since 2002.
Yeah, and it's this head scratcher of why the drop in NVIDIA, why the huge sell-off across markets. It wasn't just tech, to be clear. It was also Russell 2000 that fell some 3%. It feels like that is just a nervous market. As Keith Lerner of Truist put it, it is a sloppy transition. And you kind of see with each little piece of data, those nerves kick in.
Yeah, I mean, that's a nice way to describe it. A sloppy transition is not done yet. There's a sense, I mean, Dan Ives was with us, and there was a real sort of sense of just stand back for the moment from Dan Ives, rather than that usual full bull evangelization of Jensen Huang. The mood is, it's not completely oversold, but you just got to be cautious as far as this market is concerned.
Yep, certainly caution, the name of the game. That's it for Bloomberg Brief Surveillance. We'll take things from here.
Institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's treatment of Palestinians in the West Bank, or you can say, we can talk about the Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs, so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There's a lot of opportunity for those who want to do their homework and look in the equity market.
I think there's opportunities in things that aren't so obvious to people because they are more economically sensitive.
The income side of the economy is what has me most concerned. It's not a reason to panic, but it's a reason to understand why consumers are going to be more prudent.
The outlook for retail for the rest of 2024 may not be so strong.
Subsurface activity down the cap spectrum, you have started to see more improvement, and I think that's a healthy thing for the market.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. Your trading day starts right now for our audience worldwide. This is Bloomberg Surveillance, and your scores are shaping up as follows. We're down on the S&P once again, down by 0.3%. On the NASDAQ 100, down by 0.4. On the Russell, the small caps, down by 0.3. Coming into Wednesday, attempting to shake off an ugly start to September following the biggest one-day loss since the early August rout. The one name to watch this morning, once again, in the pre-market, it's NVIDIA. NVIDIA trading just a little bit softer, down by 0.8%. It just had its worst day since April, down by just short of 10% in yesterday's session, a loss of almost $280 billion in market cap, the biggest single-day loss of market cap ever in the history of this market. Bigger than the market caps of Chevron, Pepsi, McDonald's, and Wells Fargo, and almost the size of a Netflix. AMH, things getting worse this morning.
Yeah, things are getting worse. And after we saw the stock tumble yesterday, it was dealt another blow from Bloomberg's reporting about the DOJ. First, they sent questionnaires to companies like NVIDIA, and now they are sending legally binding requests, AKA subpoenas, which is another step, Jonathan, basically the government to launching a formal complaint. When you look at the market share of NVIDIA and how much it controls, Mizuho says it's about 70 to 95% for the market for AI chips.
I think this spooked a lot of people in yesterday's session. What was the sell-off really about? We'll get into that in just a moment. Here's the take from Bank of America. The 5th of August shock reminded us that markets can remain fragile, certainly fragile yesterday, and the stronger Fed put and AI bubble potential only raise fragility risk. Coming up through today, this is your lineup. A little bit later on today, we'll get the job openings coming up a little bit later. Then the beige book after that in the afternoon. Then on Friday, everything in anticipation. I would say anxiety building around this jobs report. The August jobs report just a few days away. The median estimate in our survey still in and around 160. And a lot of guests coming on this program, Anne-Marie, in the last couple of days, the last week or so, signaling that anything around 100 could tee up that 50 basis point cut.
And then officially, it's bad news is bad news. And how does the market read that if it's a 50 basis point cut? Is this the fact that the market says, well, the Fed has just been behind the curve? Or does the Fed signal to the market that bad news is bad news, and we're doing this because we actually see economic conditions are really worsening?
Equity futures right now, just a little lighter, softer, negative by 0.25%. If you're just joining us, welcome to the program. Here are the scores in the bond market. Treasury yields on a 10-year at the moment look a little something like this, down 2 basis points to 380. On a 2-year, we're down about 3 basis points to 383. And foreign exchange, the euro, just a little bit stronger. Not much price action there. Euro dollar 110.53. Coming up this hour, we'll catch up with Russ Kostrock of BlackRock Following NVIDIA's record-breaking one-day loss, Baker Hughes CEO Lorenzo Simonelli on his outlook for energy markets, and Kate McShane of Goldman Sachs on the health of the US consumer. We begin with our top story. Traders kicking off September with a bad sense of deja vu after stocks posted their biggest one-day decline since the August 5th sell-off. Ross Kostruck of BlackRock laying out two reasons for yesterday's weakness. A reversal of Friday's late-day melt-up, which occurred on a traditionally low-volume day, and B, investors positioning for what is generally viewed as likely to be a more volatile fall. Russ joins us now for more. Russ, how difficult was it to explain yesterday's price action?
Good morning, Jonathan. I think it was pretty difficult. You know, you could point to a couple of fundamental things, the most obvious being you had a soft ISM print, which, you know, we all remember, also contributed to the early August sell-off, but it wasn't that bad. And I think a lot of what happened was you had this melt-up on Friday, you had a strong close to the month, people repositioning, and you have some positions that we know are somewhat crowded. So I would say that was more of a technical adjustment than any major shift in the fundamentals.
Do you think things are lining up for an August 2nd repeat, an August 5th repeat?
Well, we already had a bit of it on yesterday. I think what's happened goes back to the comment a moment ago. You know, we're back in a world after several years where bad news was good news, and now bad news is bad news. And when you looked at the ISM number, again, it was not terrible, but it was soft. We saw the new orders component move down further. And I think this played to the fears that really have been dominant since early August, which is, what if the economy is softening more than we think, more than the Fed thought, and what does that imply for the market, and particularly for 2025 earnings, which are somewhat aggressive?
Well, we heard from the chair of the ISM, Russ, yesterday, who said we're not going to see things really start to change here until December, January. People are waiting about interest rate reductions. There's also concerns, obviously, about the U.S. election. Could this potentially be a self-fulfilling prophecy when it comes to the manufacturing sector?
Well, I think the economy overall, I mean, as you know, Emery, you have these moments when confidence sentiment does drive actual economic behavior. But again, I think it goes to a few questions around uncertainty. What is the Fed going to do? I think the other big question is, what is the U.S. consumer going to do? Now, our view is they're actually in decent shape. The labor market is still relatively healthy. Balance sheets are much better than they were 10 or 20 years ago. So we're not expecting a collapse. But there is no doubt the consumer's slowing. We're seeing pockets of pain in some of the low-income groups, and that is having an effect on behavior. And that's another thing that people are watching very closely to see how this feedback loop starts to take effect.
What about the fact that we have uptick in prices paid? Are you concerned about potentially inflation reaccelerating?
Not particularly. I mean, there are definitely pockets where inflation has been slow to decelerate. We see that in the U.S. We saw that in owner's equivalent rent. We see it in Europe on the service side. But in general, our thesis is prices are heading lower. And if you think about some of the input costs, if anything, if you look at the tape over the last few days, last few weeks, we've seen commodity prices pull back fairly significantly, whether we're talking about iron ore on softer China data, whether we're talking about oil. So right now, I don't think the biggest issue is input prices. I think what people are going to be watching is demand.
So, Russ, let's talk about capital allocation. We have caught up a few times over the last several months or so. It felt like you were pulling back your allocation to equities just a touch and trimming, reducing the overweight in tech. Where else have you been pulling back?
We've generally been reducing risk, so we've been doing a couple of things. We have been pulling back our overweight in equities. Most of that has been on the technology side. We've also reduced our underweight to duration. We're still a little bit underweight on the long end of the curve, but relative to where we were 3, 6, 12 months ago, we're much closer to benchmark than we've been in some time. Obviously, that reflects the fact that we have seen this improvement in inflation and this dramatic shift in the Fed's reaction function.
Can we talk about foreign exchange and the link to risk too? Dollar yen at the moment around 145. Had a breakdown in yesterday's session. Just a reminder that the BOJ is still keen on hiking interest rates, Russ. Do you think we have reduced the link between what happens in foreign exchange and the relationship with risk assets, particularly here in the United States?
I think you did clear out a lot of that trade, but it's one of those things that it's not important until it is. And you already hear stories about, well, now the Swiss franc might be the funding trade for the carry trade. I think what it does go to is less about the dollar yen. Obviously, there's some very interesting dynamics there with the BOJ looking to normalize policy. At the same time, most central banks are looking to ease. But the bigger question is, where is there still crowding? we know that there was crowding in some of the AI themes. We know that there was crowding in some of these currency markets and carry trades. And this is always the risk, that when you start to see this pullback in risk appetite, where else do you start to see these little explosions that can disrupt markets?
When we see the pullback in things like technology and AI, Russ, do you think individuals should actually buy these moments?
Again, I think it depends on the name, but in general, our view is that these themes are going to work long term. So yes, if you have a 5 to 10 year horizon and you're seeing pullbacks that were 10, 15, 20%, I think at one point early in the summer, the semiconductor index was down 25, 30%. That probably created an opportunity. So if you can have a long-term perspective and you're thinking about what are the themes that are going to generate earnings growth, cash flow growth over the next 5 to 10 years, I do think we're going to see some opportunities later this fall as you take advantage of some of the volatility.
Russ, let's discuss where else there is some crowding, particularly in foreign exchange. You mentioned the unwind of the carry trade. Kit Juice of SocGen put it like this in the last 48 hours. The focus on the carry trade is to miss the bigger story, which is the exceptionalism of U.S. assets and the U.S. economy. How deep, how entrenched, how much have we accumulated in a very, very deep, big, large dollar overweight over the last several years that needs to be unwound beyond just developments in dollar yen?
I'm not sure I would agree with that. The dollar obviously has had a very strong run for a long period of time, but that did reflect economic fundamentals. It did reflect what was, whether you call it U.S. exceptionalism or just a differential in growth. And obviously, it reflected a Fed that was engaged in the most aggressive tightening campaign in 40 years to bring inflation down. But if you look at the long-term outlook and you think about many of the companies that have been outperforming and why the S&P 500 was such a strong performer, a lot of that was based on the underlying fundamentals of not only the U.S. economy, but the U.S. corporate sector. And I don't think I would describe that as a bubble.
So, Russ, do you not think that that period of U.S. exceptionalism has come to a close, though?
No, I don't think that U.S. exceptionalism, however you want to describe it, if we're going to, define that is the ability of the U.S. economy to be resilient. If you're going to define that as the high quality of many of these world-beating companies, no, I don't think that's come to a close. Yes, many of those trades have become crowded. You may not want to chase it at these levels, but the underlying fundamentals, I think, are still solid.
Russ Kostrick of BlackRock. Russ, appreciate your time, sir. As always, thank you. Trying to make sense of what is difficult to make sense of in the last 24 hours or so. If you are just joining us again, welcome to the program. Lots to talk about. The biggest one-day loss on the S&P 500 since the early August rout to kick off the month of September. Equity futures right now on the S&P still lower. We're down by 1/3 of 1%. Let's give an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Cathay Pacific is canceling more flights from Thursday to Saturday. It's still inspecting its fleet of Airbus A350 jets and Rolls-Royce made engines. At least 15 planes need to have engine fuel lines replaced. At least 90 flights have been canceled in total. Earlier this week, a part failure forced an A350 aircraft bound for Zurich to return to Hong Kong. And John, as you and Anne-Marie mentioned, NVIDIA facing a new subpoena from the DOJ, part of a growing antitrust probe. People familiar with the matter telling Bloomberg the legally binding request puts the government one step closer to launching a formal complaint. Antitrust officials are concerned that NVIDIA is making it harder for customers to switch to other suppliers, and at the same time penalizing buyers that don't exclusively use its AI chips. Before the announcement, NVIDIA shed $279 billion in yesterday's wider equity rout. That is the most ever for a single stock. And just sticking with NVIDIA for a moment, CEO Jensen Huang's wealth tumbled the most ever after yesterday's sell-off. His net worth slumped about $10 billion, now stands at $94.9 billion as of the close on Tuesday. That's the biggest single-day drop for him since the Bloomberg Billionaire Index started tracking his wealth in 2016. And that's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Breaking news in the last couple of seconds from the Wall Street Journal. Sitting down with the U.S. Steel chief executive, the company would close steel mills and likely move its headquarters out of Pittsburgh if its planned sale to Nippon Steel collapses. The CEO saying that the nearly $3 billion that the Japan-based Nippon Steel has pledged to invest in the Pittsburgh company's older mills is critical to keeping them competitive and maintaining workers' jobs. There's a fly in the ointment of this campaign season.
Absolutely, and if you're hearing this from the U.S. Steel CEO, do you need to change your policy position? He goes on to say, we should remind people, this is someone who's really tried to stay out of the political spotlight when it comes to this deal. We wouldn't we wouldn't do that if the deal falls through. I don't have the money. They need this cash injection in order to maintain those factories, and what he says, those people's jobs.
More on the story in just a moment. Up next on the program, tax policy on the table.
If Donald Trump were to be re-elected, he intends to give more tax cuts to billionaires and big corporations. He wants to impose what, in effect, would be a national sales tax. I call it the Trump national sales tax on everyday products and basic necessities.
Some of that conversation up next, live from New York City this morning. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
America getting back to work, selling stocks and buying bonds. Equity futures right now, negative 0.4%. The move continues. Yields a little bit lower once more, down by a basis point or two. The 10-year, 381.39. Under surveillance this morning, tax policy on the table.
If Donald Trump were to be re-elected, he intends to give more tax cuts to billionaires and big corporations. He intends to cut Social Security and Medicare. He wants to impose what, in effect, would be a national sales tax. I call it the Trump national sales tax on everyday products and basic necessities.
So here's the latest. Kamala Harris preparing to unveil a second wave of economic proposals at a speech in New Hampshire this afternoon. A campaign official saying the new policy would increase the small business tax deduction for startup costs from $5,000 to $50,000. With the election just over 2 months away, Rob Casey of Signum Global Advisors saying, we still feel very confident in our Harris win base case with a divided government. Harris has pulled ahead in the majority of swing states. She benefits from two distinct trends: asymmetric turnout and asymmetric incumbency. Rob joins us for more. Rob, good morning to you.
Morning.
Translate the last line of that. Let's start there. Asymmetric turnout, asymmetric incumbency. What does that mean?
Asymmetric turnout, very simply, is that Democrats are going to be more motivated to turn out and vote in November than Republicans. Now, of course, the base of both parties will turn out on November 5th, but the question is, how does Kamala Harris, how does Donald Trump get the sort of fringe voter, the voter who maybe isn't super excited about either candidacy, to turn out and vote? We think abortion is going to drive turnout significantly, especially for women, Democratic women, in states like Arizona and Nevada, where abortion is explicitly on the ballot. And, you know, the economy is certainly an important factor, though Harris isn't getting tagged for it as much as Biden did. And the border, while voters are focused on it, we don't think polling shows that it's going to drive turnout in November.
Asymmetric incumbency. How sustainable is this?
Yeah, asymmetric incumbency, you know, I think for the most part it's sustainable. Harris gets to fly around on Air Force Two. She gets to stand behind the seal of the vice president, which to most of us looks a lot like the seal of the president. But polling shows that voters are not blaming her for inflation, for the state of the economy, to the extent that they're blaming Biden. So she gets all the pros without all the cons.
How has Trump not been able to identify her and tether her to Biden?
You know, it's really interesting to see the Trump campaign struggle to tag Harris with any sort of attack line. When Harris replaced Biden on the ticket, the reporting was the Trump campaign had been preparing for this eventuality for months. But it doesn't really seem as though they've had a great plan, and it doesn't seem as though Trump has sort of found the attack line that's going to work against Harris. Maybe he will during the September 10th debate, but otherwise we haven't seen it.
I know you're looking at the polls and you're seeing Harris edge slightly ahead of Trump in a lot of them when it comes to these swing states, but that's where we were in 2016 with Hillary Clinton. Why do you think this is different?
Yeah, you know, it's a fair point, and we get asked by clients a lot which direction polling is going to be wrong this time. Of course, in 2016, it underestimated Trump. In 2020, very much the same. It overestimated Joe Biden, although he wound up winning anyway. I would make a few points. The first is that I don't think there's a silent Trump voter anymore. That was the case in 2016. I think we're hearing from Trump voters, from those who are voting for Trump. They're proud. They're excited to vote for Trump. You know, former president, hopefully future president in their mind. But we don't know. Nobody knows where the polling error is going to be this year. At this point, you know, mid to late September, the polls are going to get as accurate as they will. We'll be within 3 to 5 points, hopefully. Of course, the error could be bigger. But directionally speaking, we don't know whether it's going to go left or right this time around.
You think this might come down to one state, Pennsylvania? I'd love your thoughts on this story that's just come out from the Wall Street Journal, speaking to U.S. Steel CEO, saying that the company would close steel mills and likely move its headquarters out of Pittsburgh if its plans to sell to Nippon Steel collapses. That out just moments ago. Where are the campaigns on this issue now? And does this story change things?
You know, I think this story might change things. First of all, let me just say that we think that Harris's easiest path to victory is through the blue wall, Michigan, Wisconsin, and Pennsylvania. If she wins only 2 of those 3, she very likely has to win Georgia and either one of Arizona or Nevada. The polling shows that if she can just win Michigan, Pennsylvania, and Wisconsin, it's essentially over. The Nippon Steel story is an interesting one. I think Harris and Biden have sort of been caught out, and that is to say that they want to retain U.S. ownership. And the news today sort of throws a wrench in that plan and that policy proposal, you know, on the campaign trail. Now, I don't think Harris is going to pull a 180. At this point, it's too late, given what she said recently, Pennsylvania just on Monday. But maybe there is, you know, an opportunity for Harris to take a step back and say what's best for voters, i.e. what's best for workers in Pennsylvania, is a deal.
How much state intervention could we see? And forgive me for putting you on the spot. This story's only just come out, but where's this going in this country? If we're not going to allow foreign competition to come in and buy domestic champions, if that's going to be the direction of travel for the next year, the next 4 years, and maybe the next decade or so, what is the government's role in a marketplace going to be?
Yeah, you know, I think in a Trump 2.0 presidency, that would be the direction of travel, point blank, period. I think in a Harris presidency, there's a little bit of nuance, and that is, you know, hoping that we can continue to collaborate with allies, Japan included, and allow them to have access to the U.S. market just as they allow us access to the Japanese market, et cetera. So it's major intervention under Trump. I think it's minor intervention under Harris with an eye towards, you know, strengthening NATO, strengthening essentially NATO of the South China Sea. So otherwise put, there's a little bit more of a balance between economic intervention and defense collaboration.
Japanese auto companies, though, are in the United States, and they employ thousands of Americans. Is this idiosyncratic because it is such a name brand of American nostalgia?
Yeah, I do think it's idiosyncratic. I mean, Japan's one of our greatest allies, so it doesn't really make sense that from a defense national security perspective, we would prevent them from participating in a key industry. But U.S. Steel is a major brand in this country. Of course, it's labeled U.S. Steel for a reason, and so I think that makes it very hard, especially on the campaign trail, for Harris, just like for Trump, to support a deal. I mean, frankly, this is a policy that is influenced more by, I think, the election and by the importance of Pennsylvania and Pennsylvania steelworkers in particular than it is about any sort of, straight ahead, conducive, helpful policy.
So can we talk a little bit about Pennsylvania to put it all together? Pennsylvania legislature, or state legislator, basically says Republicans are registering more. New registrations are coming from Republicans than Democrats. So what gives you the confidence that Harris could win that state?
Yeah, so here's what I'll say about Pennsylvania. It's interesting. This isn't the case for all states. If you register for a Pennsylvania driver's license, you're automatically registered to vote. So it's not necessarily that voters are, showing up to the DMV to register to vote proactively, right? It's you're getting a driver's license, you're renewing your driver's license, you're now registered to vote. So that's the first point. The second point I would make is, generally speaking, Democrats have a pretty significant lead in voter registration in Pennsylvania. So while Republicans are narrowing that gap, to a certain extent, and we wouldn't discount that. It's not as though Republicans are pulling well in the lead. And I'll just say, Anne Marie, if voter registration was the thing that decided every election, none of us would be here talking about it. We would already know what will happen. It really goes back to that question of who will turn out in November.
Rob, wanted to squeeze this one out of you as well. This from Goldman Sachs in the last couple of days. We estimate that if Trump wins in a sweep or with a divided government, the hit to growth from tariffs and higher immigration, tighter immigration policy would outweigh the positive fiscal impulse. They say this about a potential Harris administration. New spending and expanded middle-income tax credits would slightly more than offset lower investment due to higher corporate tax rates. It sounds like things are worse under Trump, according to Goldman, for growth, and less bad under Harris. Is it too early to make these kind of calls about the future and the impact on growth?
I think the election year trade is incredibly difficult. But I think as we look out 2 to 4 years, Harris is obviously not going to implement the tariffs that Trump would, although I do think Democrats will continue to keep spending on things like the child tax credit and, also furthering and continuing extending most of the Trump tax cuts for essentially anybody making $400,000 or less. It's about 80% of the country. Trump, on the other hand, I think he'll have a hard time bringing down spending to the extent that some Republican hawks, especially in the House, would like. And of course, Goldman, among others, incredibly concerned, I think rightfully so, about the impact, the potential impact of tariffs.
Rob, this was great. It's good to see you. Let's do this again. Rob Casey there of Cigna Global Advisors. This story just dropped in moments ago. If you are just joining us, just to repeat it, coming from the Wall Street Journal, the U.S. Steel CEO saying the company would close steel mills and likely move its headquarters if its planned sale to Nippon Steel collapses. This one just ramping up a touch in the last couple of days.
And the debate's going to be in Pennsylvania, so this has to be one of the key questions, especially as U.S. Steel now is going to rally employees today to say we need this deal potentially to keep our jobs.
Once again, becoming a big campaign issue. Coming up on this program, Lorenzo Simonelli, the Baker Hughes chairman and CEO on the Global Energy Outlook. That's just around the corner from New York. This is Bloomberg.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Live from New York, welcome back to the program. Yesterday, the biggest one-day slide on the S&P 500 going back to August 5th. We all remember August 5th. That was a difficult morning for this market. Equity futures right now pulling back by 0.4. On the Nasdaq 100, down by 0.6. The small caps on the Russell, down by about 1/3 of 1%. Switch up the board and turn the page, and let's get to the bond market. The front end of the yield curve, the 2-year, 383.43. Yields are dropping by 2 or 3 basis points. Anxiety building ahead of the payrolls report on Friday. The estimate's still coming in. Our survey continues to build, but the estimate, the median estimate for payrolls on Friday, still sticking at about 165. That's up from 114. Looking for unemployment to drop back to 4.2% from 4.3. I've repeated the call from Citi a few times. It's worth repeating once again. Andrew Honhor suggesting that if we come in at 4.3%, if we print around 125 on headline payrolls, this Fed goes 50. That's the call from Citi. Up to you whether you agree, but that's the call out there from Citigroup this morning. That's the bond market. Let's get to foreign exchange and wrap things up. I want to look at dollar yen. Dollar yen, was it at the epicenter of what we saw play out yesterday in equities? 145 on dollar yen, negative by 1/3 of 1%. A stronger Japanese yen. Just when we thought we'd cut the link between what develops in foreign exchange and what happens in risk assets, just felt like it reinforced itself just a touch in yesterday's session. But I think it would be a stretch to point to any one thing as the reason why we had the move we had yesterday morning into the afternoon.
It was almost a perfect storm, and some are brushing off the ISM. Others are saying, actually, the ISM seems to be important in terms of the manufacturing sector in the United States. Then, of course, you had NVIDIA. There was actually 2 notes yesterday, Jonathan, talking about this idea that AI is not going to be like a light switch. It's not going to be quarters. It's going to be years in terms of where we could potentially see that growth. And then, of course, there's been a lot of commodities impacting the market as well. This concern around China and weakening demand there.
You mentioned NVIDIA, so let's get the update. Under surveillance this morning, one of our top stories in the last 12 hours or so. Bloomberg learning the U.S. Justice Department sent subpoenas to NVIDIA as it seeks evidence that the chip maker violated antitrust laws. Officials are concerned that NVIDIA is making it harder to switch to other suppliers, and penalizes buyers that don't exclusively use its AI chips. That stock is down by another 1% in the pre-market after dropping by almost 10 in yesterday's session. And this news coming after the close. So more pain for this name.
Right. This was the final blow, basically, for NVIDIA yesterday as we saw shares falling. I go to the stat from Mizuho Securities. What they estimate is pretty much sums up why the DOJ has some of these concerns. NVIDIA controls between 70% and 95% of the market for AI chips used for training and deploying models like OpenAI GPT. On top of that, the DOJ is concerned as well with some of its acquisitions recently, like Run AI, making it harder for these other companies to compete.
Stock is down by about 1%. I talked about that recipe, toxic brew, so to speak. Bramo's not here, so I'll use her phrase for her. The toxic brew, one part of that toxic brew, the data data out of China, and this is the latest. Services activity expanding less than expected in August. The Caixin Services PMI falling to 51.6 versus 52.1 a month ago. The data adding to a picture of economy at risk of stalling and fueling this move lower that we've seen in commodities. Goldman, the latest to cut its outlook for copper, cutting it by 5,000 for next year, down from 15 to 10.
And when it comes to copper, actually yesterday, Bloomberg TV also caught up with Jeff Curry, formerly of Goldman Sachs, now at Carlyle. He had told us months ago, this is the best trade he's ever seen in his career. Now he's saying there's a floor and there's a ceiling to copper because of all the noise coming out of China when it comes to things like tariffs in the EV space and also when it comes to the property market, which has been the huge drag on that economy.
Not just copper, not just iron ore, it's crude as well. Oil continued to fall after a meltdown of almost 5% in yesterday's session. Downbeat economic data from the US and China stirring demand concerns, while a Libyan official predicted a resolution to the crisis that has shuttered half the country's output. We have the smallest of bounces this morning on Brent crude by 0.1%, on WTI up by almost 0.2. Elsewhere, the Barclays Energy Investor Conference kicking off today in New York. Baker Hughes CEO Lorenzo Simonelli attending following a better than expected earnings report earlier this summer. The company seeing higher demand for its drilling services and equipment in international markets. I'm pleased to say that joining us around the table is Lorenzo. Good morning, sir.
Great to be with you.
Let's talk about the outlook. You raised the midpoint of that outlook. Competitors did not. A similar story with competitors, though, was this better international backdrop compared to, say, what's happening domestically. What explains that divide that's emerging right now?
I think, first of all, as you look at Baker Hughes, the strength of our portfolio is much broader than just oilfield services. And so as you look at the results that we posted in second quarter and also the increase in guidance, it's really based on that total portfolio capability that we have that extends into rotating equipment, compression, and industrial sectors as well. As you look at the international markets, again, they are going to continue to grow. And again, we said at the beginning of the year, we would see high single-digit growth in the international markets. We retain that view as we go into the second half. And as we go into 2025, the growth will still be there. It will decelerate. And it's really driven by the demand that you're seeing internationally. When you look at the exports, for example, from Saudi Arabia, a lot of that goes to other countries. Very little comes into North America or goes into the developed marketplace. It really is a developing market aspect and the growing population. And demand for energy globally is increasing.
Can you talk to us about the headwinds domestically and where they're coming from? Is it off the back of the consolidation we've seen? We see more careful spending. Is it off the back of lower prices? What's driving it?
There's definitely a lot of the aspects of consolidation that have taken place. There's efficiency also that you're seeing within the production, which has enabled production to stay relatively flat and increasing in some cases. And so domestically, I think, again, we continue to see weakness as we look at the second half of 2024. And then also in 2025, really looking at North America to be flattish. The gas market may be increasing somewhat. But North America is really the operators being very pragmatic with their balance sheet. And again, capital discipline is the name of the game.
Yeah, you just need a lot less capital now to produce even more oil than you had in the past. But you think it's going to be flat. Some of the numbers we've run actually see 13.9 million barrels a day coming from North America and then 14 in 2025. Do you think that's an accurate trajectory?
Again, if you look at between 13.9 and 14, you're looking at a very slight difference. And again, it's driven by the efficiency. It's very transactional in North America. So I think it's early to call right now, and we'll continue to monitor it. Baker Hughes is much more focused on the production side and also the chemical side. And I think what we are seeing is really a focus on existing wells and also improving recovery rates from existing wells. And that's where the mature asset solutions that we provide actually have a huge opportunity. And it's actually important to remember, 70% of the world's production comes from mature wells. And that's a well that's been in operation for over 25 years or has 50% of its reserve depleted. If you're able to increase the reserve recovery by 1%, you're going to add 2 to 3 years of the production required globally. So there's a big focus on capital discipline and maximizing the recovery rates from the mature assets that are available.
You also mentioned gas. Can we talk about liquefied natural gas? Because yesterday we actually saw the Energy Department go ahead with an export license because the Biden moratorium on these export licenses, the courts have pushed back. Is that a sign that potentially we could see more LNG come online?
First of all, very pleased that the license was given, and congratulations to the team there. I think as you look at the global expectations, it's that the moratorium actually ceases in 2025. As you look at the LNG demand, it's expected to increase. We've predicted that by 2030, we need an installed base capacity of 800 million tons per annum, and the US can contribute to that. That being said, you're never sure until it's done, and international projects are continuing to go forward as well. So the LNG will be available, and hopefully the United States also participates, as it's got plenty of gas that it can export.
A big focus on this program over the last, I would say, 6 months or so has been the burden that's going to emerge on the energy grid in this country in the next several years. Every single day we talk about NVIDIA and CapEx spend coming from some major tech players, spending money, throwing money at data centers. Can you walk us through just the scale of demand you're expecting to see and what you're hearing from some of these utility providers and some of these companies, these tech firms, and the need for off-grid solutions that you can provide? How big is that growth opportunity for you?
It is a significant growth opportunity. And I think you said earlier, this isn't just about today, it is a long-term trend. If you look at some of the statistics out there, generative AI, the consumption of electricity by data centers, it's expected to double by 2026. That's going from 2% to 4% of the electricity usage. Think about that. That's the same amount of electricity that Japan uses on an annual basis. So from an installed capacity perspective, it's a significant increase. What do we have as a challenge? Grid stability, and also, I live in Houston. Today, I have power outages on a continuous basis. And we need off-grid solutions, and that's where distributed power comes in. That's where opportunities for modular capabilities of gas turbines that are packaged, smaller, off-grid, and they provide the stability to the data centers for ongoing operations. Because the other important aspect is intermittency is important because a data center can't go down. So you need to have that consistency of power generation.
What does growth look like in this area currently, and what will growth look like in the years to come for you exclusively, specifically?
For us, if you look at the industrial gas turbines that we provide, significant opportunity. Just look at the ratio of the increase on the electricity utilization from 2 to 4%. So we're looking and working with the hyperscalers, looking at the ecosystem, and we're looking at the opportunity of mini gas turbines being sold into this marketplace.
What's the overall contribution to your revenue mix do you expect to come from that in the next, say, several years? The reason I ask that question is we've seen a big rally in utility companies in line with the rally we've seen in AI firms. And if we're to sit here today and think about the changing characteristics of your stock, I need to know what the contribution from that area would be to the overall top and bottom line. What's that going to look like in years to come?
Yeah, as we look at it, and again, this could be from 500 megawatts to 1.5 gigawatts, and that's what we're looking at from a scaling perspective. And again, from a dollar perspective, it's going to range based on 500 million to potentially larger, and it's going to come over a series of years as we go forward. We look at it as a major new area that we can focus on. We've participated before, and we've played in distributed power generation, and we look at this as a growth vector for Baker Hughes.
A big concern to the U.S. energy industry has always been these cyber attacks, whether that's Colonial, what's recently happened with Halliburton. Have you seen any impact?
So we haven't seen any impact. Again, though, we're very vigilant. Obviously, cybersecurity is a big concern for everybody, and we're all taking the measures accordingly to put the controls in place and very much vigilant on a daily basis.
What does that look like, meaning being vigilant? Is that having the proper systems in place? Is there a lot of communication with the U.S. government?
There's definitely communication that takes place across the sector, and there's also trade associations that discuss it. From a standpoint of vigilance, it means making sure that we're doing our own testing on our own systems, making sure that we're putting in the controls, we're patching with the new security that's available, and also doing our own phishing exercises. And so we've got a team that continuously red team, blue team, and we test our own systems. But I also say you can never be too careful, and you've got to stay vigilant, and you've got to be prepared.
You've got a really busy day ahead of you. Before we let you go, this conversation's got a time horizon of multiple decades. The time horizon of this market at the moment is about 5 minutes. Can we just reflect on yesterday's price action? What's going on in crude, in energy markets at the moment? Is there a real tangible concern from your side around demand in China? What's it all about?
I think you're always going to have volatility on a daily basis, and it's something we deal with in the business world. At the same time, leading a company, you got to focus on the fundamentals and the fundamentals of the long-term trajectory and make the right investment decisions. That's what we're doing at Baker Hughes. And if you look at the macro tailwinds, I think it's undeniable that energy demand is continuing to increase. As you look at the population and you look at the development of nations, you also look at developed nations that are now seeing that they don't have enough energy as well, such as here in the United States. So we look at the macro aspect, and we're definitely seeing positive tailwinds.
Do you feel like the attitude to fossil fuels has shifted in the last 12 months? Do you think governments, particularly in the West, have had a bit of a reality check?
I think there is an understanding that it's not just about an energy transition, it's also about an energy expansion. And it's not about the fuel type, it's about reducing emissions. And that's where gas plays a key role, because it is abundant, it's available, and you need affordable, secure, reliable energy.
Lorenzo, appreciate it. You've got a long day ahead of you. Thanks for your time.
Thank you.
Thank you, sir. Lorenzo Simonelli there, the Baker Hughes CEO. Let's give an update on stories elsewhere with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. U.S. Steel says it will likely close mills and move its headquarters out of Pittsburgh if a planned sale to Japan's Nippon Steel collapses. The Wall Street Journal reporting that CEO David Burritt says the nearly $3 billion that Nippon had pledged to invest would be critical for remaining competitive and maintaining jobs. Lawmakers from both sides of the aisle, including both presidential candidates Donald Trump and Kamala Harris, oppose Nippon's takeover. A former top aide to New York governors Kathy Hochul and Andrew Cuomo have been arrested on federal charges of acting as a foreign agent for China in exchange for millions of dollars. The indictment names Linda Sun and her husband, Chris Hu, who's accused of money laundering rather. The U.S. alleges Sun acted on behalf of China, blocking Taiwanese representatives from state access. And the Philly 76ers are being courted by the state of New Jersey to relocate across the Delaware River to Camden. Governor Phil Murphy is pledging to offer government incentives and make land available near waterfront for a mixed-use complex. There have been discussions about moving the Sixers from their current home in South Philly to a new arena in Center City, but those talks have stalled. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, retail caution.
I do think that as interest rates go down, which will likely be through, of course, the rest of this year, 2025, we may see some rebound. But the truth is that retailers don't have a lot of pricing power right now.
That conversation on the other side. We'll catch up with Lisa in just a moment. From New York City, this is Bloomberg.
Global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Sneak peek at the price action this morning, still down, softer by 0.4%, nothing like the losses of yesterday, but adding to them. In the bond market, the rally continues, yields lower by a single basis point. The 10-year, 381.96. Under surveillance this morning, retail, caution.
I do think that as interest rates go down, which will likely be through, of course, the rest of this year, 2025, we may see some rebound. But the truth is that retailers don't have a lot of pricing power right now. So they have to be much, much more cautious about how they are charging shoppers. And shoppers are shopping around. They are looking for everything from secondhand goods to bargains wherever they can find them.
So here's the latest. Goldman Sachs is hosting its annual Global Retailing Conference with major businesses focusing on consumer trends. Kate McShane of Goldman Sachs saying the following: we have seen growing concerns around the health of the US consumer and more value-seeking spending behavior. However, our economists continue to see a resilient consumer and believe the concerns around weakness in consumer spending are likely overdone. I'm pleased to say that alongside Kate is Bloomberg's very own Lisa Brammertz. Lisa, good morning.
Good morning, John. Good morning, AMH. Thank you so much for having me. And frankly, this is really the key question for so many on Wall Street, on Main Street, basically, how resilient is the consumer? And we talk about weakness. At what point are we talking about actual weakness versus just it's getting competitive out there? Kate McShane joining us here. Kate, thank you so much for being with us. I am curious, how much weakness is there? Do you give credence to this story that the consumer is fragile?
Yes. So good morning. Thanks for having us. I think when it comes to the consumer, what we continue to see is a somewhat steady consumer. I think what we've heard from most of the companies that we cover is that not much has changed with the consumer over the last 6 months. They're employed, wages are growing, but they are being choiceful. And part of the reason why they're being choiceful is because there has been a lot of inflation over the last couple of years. Their money doesn't go quite as far. So you are seeing choices between consumables and discretionary. You're seeing choices between services and goods. And I think that's what's differentiating maybe some of the different performances that you're seeing out of retail coming out of the second quarter.
So how do you square this idea that we keep hearing this, and yet margins are expanding?
Yes. Well, there is some growth, so there is some leverage in some of these retailers' models, but at the same time, you've seen costs dissipate, especially on the freight side of things. And so there has been some improvement in margins as costs have come down on freight.
Okay, so it's more of that story and not so much that AI is creating this incredible efficiency that's overwhelming any potential price losses and pricing power that they're losing.
Not yet. I mean, we are starting to hear more, of course, about AI, just like we are across all the other industries, but it's much more nascent and more about efficiencies with regards to getting more efficient with how they catalog online with their e-commerce and maybe freeing up some tasking for their labor. But there isn't anything of scale yet that we've seen that is revolutionizing, what's happening with margins in retail.
So just to be clear, when people say maybe some of the increased productivity that we're seeing that's leading to these higher margins stems from the idea of AI making inroads, not really seeing that quite yet.
I don't believe so. Again, it's being talked about, but I don't think it's being touted necessarily as one of the bigger drivers of why margins are better year over year.
When people talk about a more choiceful consumer or a more discretionary, how much are they talking about just a sort of stagnant pool and greater competition to get that pool? And I'm thinking about higher income individuals. And increasingly, the holy grail has been just to get a chunk of that.
Yes. Well, they are speaking about the higher income individuals too with the choiceful consumer. And I think it's maybe less about consumables versus goods or consumables versus discretionary, but it's that services versus goods. Part of what we saw during the pandemic was a really heightened demand for goods, things, apparel, home goods, things like that, consumer electronics. And then as soon as the world opened up, you went back to services. We haven't quite seen that pivot back to discretionary goods. It was only on Target and Walmart's conference calls that they have just seen some stabilization in goods. So it's that choicefulness that's happening at the higher end as well, because they're choosing between services and goods.
So you've been doing this a very long time. You've been at Goldman Sachs 6 years. Before that, you were at Citigroup and Credit Suisse, and this has been a conference that's been going on for 31 years. How is this time different in terms of just the tenor of certainty or lack thereof, in terms of the economic cycle, as well as the interest rate cycle, as well as some of the technological overlays that you're seeing?
Yes. So the cyclicality is always the name of the game, right? Year to year, we're going to be in different cycles. And so certainly right now we're discussing about, the health of the consumer because of the interest rate environment we're in, because of what's happened over the last 5 years. But I think what's so different about the conference this year and what companies are going to be talking about is we are entering year 5 post-COVID. And most of the companies here had benefited in a significant way during COVID when everyone was shut in and needed to be entertained or needed to buy food. And now we should be entering a period in 2025 where it's more normal for consumer behavior. And so we're going to be focused on asking, in addition to the macro and what the expectation is for the health of the consumer, what their behavior looks like in 2025.
What are you seeing? What's the answer to that?
So we're still seeing that choiceful consumer, but as I mentioned with Walmart and Target, they are starting to see some stabilization in discretionary goods. And so our thought is that you will see more normalization of the consumer balancing the choices between goods and consumables and services.
How much do you see the most powerful companies consolidating their market share in a way that we haven't really seen in the past? And I'm thinking of Walmart, I'm thinking of Amazon, I'm thinking of some of the behemoths.
Yes. We do think that that is an element that's happening across retail too, the haves and almost the have-nots. And part of the phenomenon is that the scale and the one-stop shopping is really appealing to the consumer. So if we take Walmart as an example, it's not just the value that they're offering the consumer, the discounted prices, the rollbacks, but it's the convenience. It's the fulfillment optionality that you can get with delivery or click and collect or buy online and pick up in store.
What do you think is the biggest anxiety at this conference for the 80-some companies and executives that are here?
I do think it's figuring out the consumer. That's probably one. I would say tariffs is another. That's a big question mark as to what that looks like post the election, and it could be very costly, and retailers are going to have to figure out what they do with their pricing as a result of that.
Kate McShane, thank you so much for being with us. Thank you for having us here. That was Kate McShane, U.S. retailing analyst at Goldman Sachs here at the Goldman Sachs Retailing Conference. We'll be speaking to a host of CEOs coming up in the next few hours. John, back to you.
Hey, Lisa, thank you. Looking forward to it. Fantastic coverage still ahead on the program. On the ground with Lisa Abramowitz. The lineup is as follows. Lisa will be speaking to on-holding co-CEOs Martin Hoffman and Mark Mora, and Manish Janeja, Walmart Senior Vice President for Marketplace and Walmart Fulfillment Services. All of that still to come. Coming up next on this program, in the second hour of Bloomberg Surveillance, Drew Mattis of MetLife, Bloomberg's Mandeep Singh, Ron Dermer is ready, Minister of Strategic Affairs, and Roger Holman of Vanguard. All of that still to come. That is just around the corner. Futures right now pulling back by about 0.4% on the S&P 500, adding to yesterday's losses from New York. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977
by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
What's the overall slope of the data? We already know what that is. It's weaker.
The balance of risk is certainly on the downside of the labor market. That's a pretty significant change.
I really think the strength of the underlying economy has been largely underappreciated by a lot of market participants.
There are lots of warning signs right here and lots of reasons to be cautious, and most people aren't right now, and that's my big fear.
This is really one of the most interesting times, Lisa, I've seen for the Fed. We are just in a different economy.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
We said it earlier this morning, a bad sense of deja vu in this market. The start of September feels a lot like the start of August. Equity futures down again after the biggest one-day loss since August 5th on the S&P 500. Here are your scores. Equity futures down by 0.4 on the Nasdaq 100, down by 0.8 on the Russell. The small caps off by 0.5%. The anxiety building going into payrolls Friday. Your week ahead and your day ahead shaping up as follows. JOLTS job openings out a little bit later on today. We'll get the Fed's beige book as well. And then it's on to tomorrow when we get numbers for jobless claims, the ADP report, and the ISM services print. And then the big one on Friday, the payrolls report, the median estimate in our survey in at around 160 over the last couple of days. And expectations still for unemployment to pull back from 4.3% to 4.2%. In this market, where do you begin? Where do you end? Let's start right here and take a look at crude. Crude getting hammered in the last 24 hours, recovering right now by 0.9% on Brent. WTI up by a little more than 1 full percentage point. AMH, a story on OPEC dropping just moments ago.
Yeah, they're now discussing a possible delay to this potential output hike, increasing supply, adding more supply that many thought they were going to go through with. And that's because potentially some will say that the price is dropping too much, but also Libyan oil barrels potentially be coming into the market. This is according to the central banker, Al-Sadiq Al-Habir. Basically what he is saying is that there is a political agreement potentially to see more barrels come to the market. If Libya adds more barrels, why does OPEC need to cut? Especially as you have this growth concern surrounding China.
It's a reality check for OPEC. Crude right now, 74.47 on Brent, in the low 70s on WTI. A brief break of 70, 71.15 on WTI crude. Speaking of reality checks, let's talk about reality checks for governments on either side of the Atlantic. A reality check for this administration and any future administration, whether that's led by Harris or Trump, from the U.S. Steel chief executive in the Wall Street Journal just earlier in the last hour or so, saying the company would close steel mills and likely move its headquarters out of Pittsburgh if its planned sale to Nippon Steel collapses. And it's not just coming on this side of the Atlantic. The reality check also coming in Germany as well. VW making some news over the weekend about potential factory closures in Germany for the first time in its 87-year history, and giving us some detail on the amount of overcapacity they have right now. 500,000 cars, the equivalent of around 2 plants. That's how much sales they've lost. They need to increase productivity and reduce costs. They have 2 plants too many. That is not music to the ears of politicians on either side of the Atlantic in the last couple of hours.
Absolutely not. When it comes to Germany, a big issue, especially with VW, is that almost half of their workforce is in Germany. So if you're thinking about closing factories, that means that these politicians are going to have to deal with potentially a huge labor issue. With Germany, the issues have been really on display for a while, Jonathan. Outsourcing their energy to Russia, they can no longer do that. And also just trying to gain that market share in China. Well, now China has big competitors, which is why the EU is starting to put up the tariffs. When it comes to U.S. Steel, what the CEO is now saying, an individual has been trying to distance himself publicly from this because of how political it is. He is saying we are going to have to close plants. We are going to potentially lose jobs here in Pennsylvania, this important swing state, if we don't get this cash infusion. I was reading the Heritage Foundation research last night. Heritage Foundation, which many point to individuals close to the Trump administration, they were talking about the fact that a U.S. Steel infused with new capital equipment expertise would be a daunting competitor, saying they need to survive, they need this infusion from Japan.
If you want to protect national champions from foreign competition, Europe, by putting up the walls. If you want to protect national champions from foreign acquisition, here, ultimately not allowing the sale to Nippon Steel to go through, the burden on the state becomes even larger. The burden on the state to provide the kind of state aid that would be required to keep these companies functioning. Isn't that the direction of travel here, ultimately? I'm really interested now to see how the campaign is going to change. It felt like things were set, that it was becoming a non-issue. Harris ultimately said Nippon Steel can't do the deal. Trump has already said Nippon Steel can't do the deal. Biden's basically said Nippon Steel can't do the deal. When U.S. Steel comes out and says this, how does that language change in the coming days?
Well, Rob Casey, who was on earlier from Signum, is basically saying they may have to recalibrate a little bit. This is why I think the debate now is even more important about policy. It is taking place in Pennsylvania. This has to be one of the first questions. Do you change your mind potentially about the fact that you've all been on the record saying this needs to remain in American hands? If the company is coming out, the CEO is coming out, that's going to be rallying workers today in Pittsburgh, coming out and saying we cannot function without this deal going through.
That debate a week away. If you're just joining us, welcome to the program. Let's start with the scores again. Equity futures on the S&P negative by 0.5% on the S&P 500. Bonds still bid. The rally continues. Yields lower by a basis point or two. The 10-year 381.20. The lineup for the next hour looks like this. Coming up, we'll catch up with Drew Mattis of MetLife on the global stock sell-off, Mandeep Singh of Bloomberg Intelligence as NVIDIA faces an escalating antitrust probe, and Roger Hallam of Vanguard ahead of a critical week of U.S. jobs data. We begin with our top story. Stocks coming off the back of the biggest one-day drop since the August 5th rout, as anxiety grows about the state of the U.S. economy going into a slew of jobs data this week, starting with jobs this morning and ending with the payrolls report on Friday. Drew Mattis of MetLife joins us now for more. Drew, welcome to the program. Let's start with the credibility of the U.S. economic data. Of the data this week, would you put more weight on some versus others?
Sure. I'd probably put the beige book above JOLTS because we know that one is just kind of what people are feeling. Whereas JOLTS, because of the low response rates and, the potential for revisions, it used to be a data series that only economists paid attention to, and there was a good reason for it. And now that it's kind of gone mainstream, it wasn't quite ready for prime time. And you're having this problem across a slew of data, including in the payroll report we'll get on Friday. So we have to be really cautious here about overreacting to kind of individual events. I saw kind of the compilation of people talking about the economy before the show started. And Neil Dutta had it right. It's a matter of kind of the direction of travel. The direction of travel is towards a weaker economy. We shouldn't be surprised by this. this is what the Fed wanted to achieve when they took rates higher. The only question we have to ask ourselves now is, how much pain are they willing to tolerate in terms of the unemployment rate moving higher before they actually act? And when they do act, how fast do they act?
Before we talk about monetary policy, Drew, can we just work through payrolls on Friday? How will you navigate that report? Are you ultimately suggesting you'll put more weight on, say, the household survey versus the establishment survey? How will you navigate that report, those reports, on Friday?
Certainly. I'm not going to be actually looking at the payroll numbers. I'm going to be looking at unemployment. It doesn't matter if it's a supply phenomenon or a demand phenomenon. If the unemployment rate's moving higher, people's ability to kind of get higher wages for their work goes down, right? There's more people per job. There's not enough jobs to fill kind of the people who want them. And so you're going to put downward pressure on wages there. So you can just look at unemployment. You keep it simple. You don't have to kind of go into the detail. You can also see how many hours they're working. And how many hours they're working is actually quite important. Even though the economy's been quite strong and there's been a good amount of payroll growth according to the data, if you look at the number of hours they're all being asked to work, what we see is actually weekly wages haven't been keeping up with inflation. And so a lot of Americans who feel like they're falling behind are in fact falling behind. And they're falling behind because even though their average hourly wages are going higher, the number of hours they're being allowed to work is going down. And so in my mind, you want to watch the hours worked, because if that keeps moving lower as it has been, eventually that'll lead to job cuts, because people realize that they can't spread the number of hours of work they have among the existing stock of employees that they have, and they have to reduce the number of employees they have.
Drew, how hard is it to read the jobs reports now, given the fact that a few weeks ago we knew about not just normal revisions, but really massive revisions when it comes to the U.S. job market?
Well, that's why it's important to look at everything holistically, right? You don't want to just look at payrolls. You want to look at what's going on with claims. You want to look at the ISM employment numbers. You want a sense for kind of where the entire economy is going. And you don't really want to fixate or put too much weight on any individual component because of the potential for revisions or data quality issues. Which quite frankly, working as a U.S. economist for a long time, data quality was never an issue before. And post-COVID, data quality is increasingly an issue, and we have to be aware of it and make sure that, we're adapting to kind of a new data quality environment where revisions are larger. That creates the potential for more volatility in markets. We have to not just look at one thing, we have to look at the totality of the data.
If the data quality is not as good as it used to be, do you need to start looking more at what executives are saying, what's in earnings reports? Is that more important?
I mean, earnings reports are a great way to get a sense of things. They're not exactly perfect, because what you find is that sometimes people blame things on the economy, and in reality, it's not the economy, it's them. But I do think, you do want to look at those kinds of reports. You want to look at things like the Beige Book, right? They've been doing the Beige Book for a long time. They know the people they're talking to, the conversations they have with their contacts, can lead to some great insights in terms of the direction the economy is heading. But I don't think anyone's confused about the direction the economy is heading. It's clearly slowing down. No one's saying that the economy is accelerating from here. The real question is kind of the speed of the deceleration. Are we slamming on the brakes, or are we just tapping them? And we'll, if it's tapping versus slamming on the brakes, how fast does the Fed have to move?
Drew, I'd love your thoughts on the next month or so, just the next few weeks. It feels like from the people we've been speaking to, the bar to go 50 is actually pretty low. I mentioned the view from Citi earlier on this morning that ultimately they think 125 on payrolls, 4.3% on unemployment, which is where we are. They think that's sufficient to go 50. Drew, do you see it the same way? Because when I listen to Fed officials, I don't see them viewing it like that at all. I hear things like methodical, gradual, a reluctance to go big until they see something much more damaging.
I agree with you, Jonathan. I think if they were going to make a large move, they would have gone in July, at the very least, right? So they would have started a slower pace in July. I think perhaps maybe we can all hope that they've learned that if you miss the bus, you can't run after it and try to climb on it while it's moving, because that's what they do with rate hikes, and that's why we're currently seeing the slowing we're seeing and a lot of the dislocations in markets that we're seeing. So, if you miss your window, you can't catch up, right? This is not, this is not kind of, the economy's not that simple. So, 225 basis point cuts over a period of time versus a 50 basis point cut in a single meeting are two very different events and will have very different effects on where the market will price in, cuts over the next year, right? If you ratify market expectations of 50 now, that's going to price in, it's going to ratify market expectations across the next year or so. Whereas if you go to 25 and you say, look, we're calibrating here, then the market will have a very different response and maybe one that will allow you to actually maybe eke out a few more cuts and get policy down to a point that's a little more, in line with the sustainable growth in the economy.
You and Neil are very much on the same page. Drew, thank you, sir. Drew Manis there of MetLife. Looking ahead to the economic data this week, raising questions about the credibility of some of these reports and ultimately making a forecast on what the Fed will or won't do come September 18th. Equity futures right now on the S&P negative by 0.4%. The pullback continues, just not as vicious as it was yesterday. Let's take the opportunity to get you an update on news elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Well, the pullback in oil is not continuing this morning. It is higher by about 1% for NYMEX crude. It sank 4.3% yesterday to its lowest level of the year. There's downbeat economic data from China and the U.S. that fueled demand fears. Meanwhile, on the supply side of things, a Libyan official said it was closer to a deal that would restore the country's crude flows. Following that drop yesterday, OPEC Plus is now discussing a possible delay to an oil output increase that had been planned for October. That, according to officials involved in the talks. BYD is putting plans to announce a major planned investment in Mexico on hold. According to people familiar with the matter, China's top EV maker won't make a decision until after the U.S. election. BYD was scouting 3 locations for car production facilities in Mexico, but has stopped actively looking for now. U.S. political uncertainty also led Tesla to delay plans for a factory in Mexico. And shares of Dollar Tree plunging nearly 12% in the pre-market trade. The discount retailer reported second quarter earnings that fell well short of estimates. The company also forecasted full-year net sales below prior forecasts. The company's CEO saying, quote, "We are encouraged by the continuous progress we are making, despite immense pressures from a challenging macro environment." That's your brief. John.
Some of the reports, the language coming out of the discount retailers, really not good over the last few weeks. Danny, thank you. Up next on this program, the Beltway versus Big Tech.
I just view this as more of a scarier headline than the reality. And also in the context of what's happening in Big Tech, NVIDIA is just part of the club that continues to be part of that pressure, Beltway versus Big Tech.
That conversation up next, live from New York this morning. Good morning.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
Let's start with a snapshot of the price action, and then we can look at one single name. Cross-asset, things are shaping up as follows. Futures, negative 0.5%. Bonds, still rallying. That risk aversion continues, down 2 basis points on a 10-year, 381. Let's talk about a single name together. Dollar Tree, cutting its outlook on muted consumer spending. Danny brought this stock up just moments ago. We're down by more than 12%. Think about what we heard from Dollar General in the last CEO. This was the CEO from the last week or so. This was the CEO a week ago. Inflation has continued to negatively impact these households, with more than 60% claiming they have had to sacrifice on purchasing basic necessities. A shocking headline coming out of that name in the last week on low-income shoppers. And you see it again this morning, Dollar Tree down by 12%.
The issue is a lot of these stores actually were the ones that were able to do well in times of economic stress for especially individuals in lower income scale. The issue is the competition right now that they're seeing from places like Aldi coming into the United States and Walmart.
It's a big struggle. That name is down by more than 12% in the pre-market. More still to come on that conversation. Under surveillance this morning, the Beltway versus Big Tech.
I just view this as more of a scarier headline than the reality. Also, in the context of what's happened in big tech, NVIDIA is just part of the club that continues to be part of that pressure, Beltway versus big tech. We're not too concerned about this for NVIDIA. I think just because when you actually look at what's happened here from an execution, the reason that they've essentially dominated it is just because how stellar the execution has been and how they've just been so far ahead.
So here's the latest. NVIDIA suffering a record $279 billion rout, the biggest loss of value ever for a U.S. stock on the back of renewed AI worries. This as the DOJ slams the chip maker with an antitrust-related subpoena over its marketplace domination. Joining us now to discuss is Bloomberg's Mandeep Singh. Mandeep, good morning.
Morning.
Simple question, maybe complex to answer, but what have they done wrong?
Well, so in this case, what DOJ is investigating is how have they distributed their chips to their customers. And anytime you have, a virtual monopoly, in this case, NVIDIA has over 80% market share in the GPU business. In an undersupplied market, how are they distributing the chips comes into question. And I think some of the focus is simply because their largest customers are the hyperscalers. So NVIDIA could potentially tell them to buy more. Otherwise, they can pull back, the allocation they have to a certain hyperscaler. So things like that, there's nothing clear, but NVIDIA is clearly trying to go up the stack. They have also made an acquisition that may come into focus as well. The deal hasn't closed. It's a small company called Run AI. But potentially, they may have to make some remedies. I still don't think there's anything big here.
Let's separate the purchase just for a moment. I just want to explore the supply. What are the alternatives? Where else would they go if they couldn't go to NVIDIA?
And that's the thing, right? So potentially customers could go to an AMD. AMD has a small GPU business, but in this case, there's a clear preference in the market for NVIDIA's chips, and those are more undersupplied than any other chips. So the question is, how is NVIDIA deciding who are the customers who should be getting the allocation? So if they, let's say, make 20 million chips in a year, how are those getting distributed? And I think that's where the question comes into play, whether SMCI, did they overbuy NVIDIA chips? Did NVIDIA ask them to overbuy those chips? So that, I think, again, nothing is clear, but because the market is so undersupplied, The question is natural. How is NVIDIA working with its customers that's a concentrated base?
A lot of criticism has been NVIDIA's moat strategy. Can you actually explain what that entails?
Well, look, NVIDIA clearly has the IP when it comes to these GPUs. They also have a software layer, CUDA, which everyone talks about, how it makes their cluster better than some of their competitors. And now they're trying to move up the stack in terms of actually deploying the large language model. So they've been doing things way ahead of competition. That's why Intel is trailing and AMD has been lagging, is because they've been at least 12 to 24 months ahead in this market. And that shows up in the mode, that shows up in the scale, even though they guided conservatively for the next quarter, according to historical standards. But still, the ramp of the data center business has been nothing short of phenomenal.
So the DOJ is going after NVIDIA. Customers want NVIDIA chips, but Intel seems to be somewhat backed by the U.S. government. $20 billion grant. What's going on there?
Well, so that grant was more on the fab side. Look, when it comes to chip design, I think Intel can make those chips and go to TSMC to have those manufactured, since they don't have the manufacturing capacity here. But what the US government is giving them subsidies for is really to build the fabs here. And we know those will take time. That's where Intel still has to prove that their execution is working. But I think those are two separate things. NVIDIA is obviously a fabless vendor. It outsources all the production to TSMC, and everyone in the GPU space right now is going to TSMC to have their chips manufactured.
Before we saw, though, the DOJ news come out yesterday, the stock was already falling. What do you think was really the catalyst for that? What was driving this?
Valuation. We talked about it during earnings. You really need to see the estimates keep going higher. If the estimates are going sideways, that's not enough to sustain these kind of valuation multiples. NVIDIA was trading at over 35 times forward PE. At those kind of valuations, you better see your estimates keep going high. And the way they guided, it was a little conservative on the Blackwell side, the delays, and now this antitrust. All these are incremental factors that will just prevent people from raising their estimates.
What does this volatility remind you of, and this single name? Have you ever seen a stock move like this, a stock this size move like this, $280 billion of market cap in a single day?
No, because the way NVIDIA has grown, its market cap has been nothing short of phenomenal. The way they came from 1 trillion to 3 trillion, there wasn't a lot of time in between. And that's why, with these 1-2 day moves, they're sharp moves, but then in the grand scheme of things, it's still not that big. Yes, it's a $3 trillion market cap company. You would expect it to be more stable, like a Microsoft or an Apple, and you don't want to see that, but it's not recurring revenue. And that's the biggest risk for NVIDIA, that this is not a recurring revenue business, although some would argue that you have to refresh your chips every year, you have to upgrade your data centers, so it will become a recurring revenue business over time.
Does that make you nervous?
Absolutely. That's the big risk, that even if NVIDIA executes phenomenally well from here, the valuation multiple may still compress, because what's priced in right now is that 50% plus growth going forward. Everyone expects this year they will grow, they'll double their data center revenue. What about going forward? What is the free cash flow profile? The gross margin risk. Everyone talked about how the gross margin has peaked for NVIDIA, and for a good reason. They had some Blackwell delays. They need the distribution. And so if the gross margins are compressing, estimates aren't going up, the stock cannot keep expanding multiple.
You flagged this for a while. Mandeep Singh of Bloomberg Intelligence. NVIDIA is down by almost 2%. Coming up next on this program, we'll catch up with Ron Dermer, the Israel Minister of Strategic Affairs. That conversation up next.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Quite an eventful start to the month of September, that's for sure. Equities down across the board. We're negative 0.4 on the S&P. We're down by 0.7 on the Nasdaq, down by 0.4 on the Russell. An eventful start that looked like this in yesterday's session on the S&P, the worst day since August 5th. On the Nasdaq 100, the worst day since July 24th. Late July and early August, a messy period for this market. Are we looking at a repeat of that going into payrolls on September 6th, this Friday? In the bond market, let's check things out. A 2-year, 10-year, 30-year shaping up as follows. Your 2-year at 383.43. If we can check out a 10-year at 381, we're down a couple of basis points there as well. Anywhere from 1 to 3 basis points lower across the curve from 2s out to 30s. This quote came from Ed Al-Husseini of Columbia Threadneedle in the last day or so. If you miss the big rally, it's going to be a little dangerous to chase it now. We are playing with the probability of the job market stabilizing here or deteriorating fast. That's the debate for the rest of the year, and certainly that's the debate right now going into payrolls. Switch on the board and turn the page. I want to talk about the commodity market, what's happening in crude. Crude bouncing after yesterday's losses on Brent and WTI. We're up by 0.6%. We were up by more than 1. News story out in the last couple of hours. AMH signaling that maybe OPEC is backing away from its supply decision later this year.
Right, they're maybe going to add some more barrels to the market later this year in the fall. Doesn't look like they might do that now. You saw prices yesterday really have a little bit of a scare. Part of that has to do with these concerns coming out of China, but also, especially OPEC wanting to potentially make this U-turn, has to do with the fact that we might see more barrels come from Libya. So if Libyan oil barrels get to the market, there's really no need for OPEC to bring barrels to the market, especially if they want to keep, Jonathan, a floor under this moral market, the price.
That's the latest on crude. Under surveillance this morning, let's get to some top stories for you. Kamala Harris set to propose a $50,000 tax benefit to boost new small businesses, increasing the current deduction tenfold. Harris setting the lofty goal of 25 million new small business applications in her first term if she's elected. It's another effort to try and signal that they're still going to be the party for corporate America at a time when we're not sure which party is what.
And it looks like they feel this administration, what we saw recently from Joe Biden, but also on the campaign trail from Kamala Harris, she's trying to feel like she can move towards the center. They have the progressives at the moment potentially lined up behind them. She wants to go out and say, we are for big business. But this all comes down to small businesses. But this all comes down to the tax fight for 2025. And you're going to hear a lot of people almost feel like they're throwing policy spaghetti at the wall and seeing what sticks. But this is all going to happen depending on the composition of Congress. Also, we should note, they come out with things, the Harris campaign, talking about price gouging. Then you have an economic policy advisor to Kamala Harris, Mike Pyle, come on this program, walk it back, saying this is just about regulation. We don't think it's grocers' fault. But then what do you see in the last 24 hours? Ads over swing states saying it is corporate greed, they're driving up your costs, and that is the responsibility for this greedflation.
Let's focus on one swing state. Let's focus on Pennsylvania and this story right here and how difficult it's going to be to navigate this in the months to come. The U.S. Steel CEO, David Burritt, telling the Wall Street Journal the company will likely close steel mills and move its headquarters out of Pittsburgh if a sale to Nippon Steel collapses. Both presidential nominees And we know this from campaigning over the last 24 hours alone. Kamala Harris and Donald Trump coming out against the deal, the topic raising questions and tensions in the crucial swing state of, drum roll, Pennsylvania.
So with this new information, I want to know whether or not we're going to see a reversal, like we have seen from politicians, regarding this transaction. Donald Trump is going to be giving an economic speech here in New York tomorrow. Will he talk about this? Also, Jonathan, I know this is reporting in the Wall Street Journal, but the editorial board this morning scathing on both of these campaigns. They say a sign of the rotten political times that President Biden, Kamala Harris, Donald Trump, and J.D. Vance all agree on the dumbest economic idea of the presidential campaign so far, opposing this acquisition. They say because this is the money needed to make sure that you have a robust steel industry and a growing U.S. steel in Pennsylvania.
That's the latest on Pennsylvania. Let's get to the latest on the Middle East this morning. The Justice Department charging 6 senior Hamas leaders with terrorism and conspiracy to kill Americans days after 6 hostages were killed in Gaza. The charges including counseling to the group's October 7th assault on Israel, as well as a string of other attacks going back more than a decade. The Attorney General Merrick Garland citing the death of a 23-year-old Israeli-American in his statement. Joining us now to discuss the state of this war and the future is Ron Dermer, Israel's Minister of Strategic Affairs. Minister, welcome back to the program, sir. I think we're all very, very focused on where we are in truce talks, and we'd like to start the conversation there, if we can. This came out from the Times of Israel, just reporting just moments ago that the Prime Minister, Netanyahu, sent the Mossad chief to Doha to inform the Qatari PM that Israel is still prepared to fully withdraw from the corridor between Egypt and Gaza in a deal's second phase. Can you confirm this morning for us, Minister, whether that reporting is accurate or not?
No, I think just to explain to your viewers what we're talking about, because there's been so much misreporting and half reporting. Understand that Israel currently occupies this corridor, which is between Egypt and Gaza. And that corridor, when it was left open and when Israeli forces were not there, was used as a supply route for all of the arms coming into Gaza. That's how they got armed. Their other borders actually are with Israel. And so the arms did not come from Israel. They came through that border. And Israel took over the Philadelphia corridor in the last 2 or 3 months, and also the Rafah crossing. And that has blocked all the arms and weapons from going into Hamas. The deal that is proposed on the table, phase 1 of that deal, Israel has made clear, and the Prime Minister made clear in a televised press conference a couple days ago, and I'm sure he'll speak to the foreign press soon as well, that Israel's not going to withdraw from that line. We won't withdraw off that corridor, because if we do that, then you're going to see those weapons come back. Phase 1 of this deal, what it calls for, Jonathan, is to have negotiations over the conditions over a permanent ceasefire. And once you've concluded those negotiations, while you're in a ceasefire for phase 1, in order to get to phase 2 and a permanent ceasefire, that's when you can discuss long-term security arrangements on the Philadelphia corridor. So I think that report is a little bit misleading, thinking that in a few weeks Israel is going to leave. But it is true that Israel is committed to actually negotiating this deal. We've been committed from the beginning. When the president put forward a proposal based on a May 27th document, he put forward a proposal and a speech at the end of May. Israel said yes, Hamas said no. Then the U.S. put forward a final bridging proposal, which they called it a final bridging proposal, in the middle of August. We said yes, Hamas said no. Hamas has not been interested in moving ahead to close the deal. They were interested, frankly, Jonathan, for the last several weeks, in an escalation in the region. They wanted Hezbollah to attack Israel. They wanted Iran to attack Israel. And I think now they're hoping that somehow Israel's government will make compromise that it wasn't prepared to make it before. And I can assure you, Jonathan, in the wake of the horrific execution of 6 hostages, including an American, Hirsch Goldberg, Poland, Israel is not going to make concessions in the wake of that. We are committed to a deal. We set people to sit with negotiators to try to get that deal done. And I hope we can do it. We're working with the U.S. administration to try to push that deal forward.
Minister, as you know, we're very focused on accuracy here at Bloomberg. So you said that report was slightly misleading. Can we just reconfirm the aspect of it that was misleading? And could you confirm whether in a second phase, Netanyahu has ultimately sent the Mossad chief to Doha to inform the Qatari PM that in a second phase you are willing to fully withdraw from that corridor?
We don't. I cannot talk about the arrangements in a second phase because we haven't even negotiated about it. Who is going to be there? How long is it going to take? Until, I'll make it very simple for you, Jonathan, until we have an actual practical solution on the ground for the Philadelphia corridor, Israel forces cannot leave. And for the last 20 years, we haven't had that. We had Egyptian presidents and they announced that their policy was to stop the smuggling that would go into Gaza. We had that in Mubarak. We have that in Sisi today. What happened on the ground was a different matter. When Morsi was the president, you remember from the Muslim Brotherhood, was the president of Egypt, a highway of weapons came into Gaza. So the question is not necessarily Egyptian policy at the top levels. It's what's happening on the ground. What are you going to do on the ground to prevent that border from being a porous supply route for weapons to Hamas? Because we have
Minister, it raises an obvious question, if I may jump in, sir, and just interject, because I'd love some clarity from you on this. Minister, I just want to squeeze this in, and then you can complete your thoughts, sir, just quickly. If you can trust Egypt to mediate the talks, why can't you trust them to secure the border? Isn't that a contradiction that we need to try and reconcile?
No, I don't think so. By the way, Qatar is also a mediator of the talks, and Qatar has been harboring and financing Hamas for a long time, and frankly, financing the Muslim Brotherhood all over the world, and also promoting a lot of Hamas propaganda, which is anti-Semitic, anti-American, through their state-controlled television station, Al Jazeera. So I don't think those two are necessarily go hand in hand. The fact is, for the last 20 years, since Israel left in the disengagement, a move that was applauded by the whole world, we left that corridor called the Philadelphia Corridor. We left the border between Egypt and Gaza. We have not had a solution on the ground. I'm not questioning the intentions of the Egyptians. I'm questioning the results. And all of Israel saw it. October 7th could not have happened without that border being open. And so Israel now has closed that. And until we have an actual practical solution on the ground that is working after 20 years of failure, Israel can't leave that line.
Minister, I need to follow up on one other aspect of this, and that's the division that might be emerging in the Israeli government. There was another report, and by all means, if this didn't happen, you can tell me it didn't happen, that your defense minister told the Security Cabinet the following, quote, "The fact that we prioritize this corridor at the cost of the lives of the hostages is a moral disgrace." So how do you respond to that voice coming from within your own government?
Yeah, I'm not going to get into private conversations. The Security Cabinet, I will just tell you that the Security Cabinet, of which I am a member, there are 10 of us in that cabinet. 8 of us voted to support the Prime Minister's position. 1 of us voted to abstain, and 1 voted to oppose. And he made a very clear position that Israel was not going to leave that corridor. And that is a position, by the way, Jonathan, that is, in my view, supported by the overwhelming majority of the Israeli people. I believe it is wrong to say it's either staying in the corridor or saving the hostages. It's not true. There are many other aspects to this deal that haven't been resolved. The United States is working diligently to try to resolve it with the other mediators and with us. Hopefully we can get there. But it is clear that in phase 1, Israel will stay on that line until we have a practical solution on the ground that we can convince the people of Israel will know that what happened on October 7th will not happen again, that Hamas will not be rearmed. They will not have an opportunity to do again and again October 7th, which is what they're saying. That's what they're saying today, Jonathan. That's what they intend to do. We've cut off the supply lines of weapons. We're not going to open that supply line without having a solution on the ground that works.
Minister, can we go back to this phase 1 agreement? A few weeks ago, Secretary Blinken was in Israel, and he said there was a very constructive meeting he had with Netanyahu and confirmed that Israel supports that bridging proposal. Then just this week, President Biden said Netanyahu was not doing enough. How do you manage what's coming out of the United States? What exactly does the U.S. want to see from Israel, and why is Israel not complying?
Well, I think that just the facts are, Anne-Marie, as I said, there was a proposal put forward in May. Israel said yes. Hamas wasn't interested in talks. They added so many changes, around 24 changes to that proposal. Then there was another bridging proposal in August, which was the one that Secretary of State Blinken was referring to. I was in his meeting with the Prime Minister, and it was a very constructive meeting. And Hamas said no to that. And the reason why Hamas said no at that time to any offer on the table is they wanted Hezbollah and Iran to attack us and to create a regional war. That's what they wanted to do on October 7th, and they wanted to do it in the last several weeks. My hope would be, hopefully, that the potential of a regional escalation is in our rearview mirror, and we can get down and see if we can finish these talks. What the last thing that Israel is going to do is, in the wake of the execution of 6 hostages, is to make concessions that it would not have made before. That is not going to happen. In fact, all the Israeli Security Cabinet was united that Hamas is going to pay a heavy price for that decision. Because if we don't do that, not only is it going to be dangerous for get to a hostage deal, they're going to start killing hostages, thinking that if you kill hostages, you get concessions. We're trying to get as much as we can on the same page of the Americans. I think we've been there for the last couple months. Hopefully we'll continue. And I think when the U.S. and Israel show no daylight between them. And when all the pressure is directed where it should be, on Hamas, I think the chances of getting to a deal go way, way up. And I hope we can get there in the next couple of weeks.
Is it your understanding that right now what the U.S. is putting on the table in these discussions, in these conversations, is, quote, take it or leave it?
Well, I don't know. The bridging proposal that was put forward on August 16th was a final bridging proposal. So I don't know if this will be a final bridging proposal, and then we'll get a final bridging proposal. It might be that they're talking about specifics and details, because this is a kind of framework agreement, and there's still a lot of things to be negotiated. Again, the problem in the negotiation is not just the Philadelphia Accord. There are several things, maybe a half dozen things that have to be closed in order to get to a deal. Right now, we have not seen, and I want to repeat this again, at no point has Hamas agreed to any deal that's on the table. They have rejected everything. We had one movement of Hamas, which was in early July, where they understood that there's not going to be an end of the war as an entry ticket into a deal. There will be a temporary ceasefire of 6 weeks, and then during that temporary ceasefire, we're going to have to negotiate what would be the conditions of a permanent ceasefire. The Philadelphia Corridor and how you block weapons from going into Gaza is an important part of that. We're willing to negotiate all of that, and we're willing to get into that first stage of the deal. Hamas made that change. I don't know if they still actually agree to that. But on the other issues, there are still pretty significant gaps that have to be closed, and the U.S. is trying to do that. I will tell you that the Justice Department's decision yesterday was a very good decision to put pressure on Hamas. Hopefully, the other people internationally and regionally will put as much pressure on Hamas as possible, because Israel's government wants to get to a deal. Believe me, Israel's government wants to get to a deal. What we're not willing to do is go to a deal that's going to endanger the security of 10 million Israelis. But we're willing to do a deal, and we hope we can get there as soon as possible.
Minister, you're saying you want to get to a deal, but just this morning, your National Security Minister, Ben-Gvir, came out on Twitter and said, quote, I'm acting to halt negotiations with Hamas. So is that not accurate?
That's not the position of the government of Israel or the Prime Minister of Israel. As I've told you, we have different views of different government ministers, and the Prime Minister encourages people to say exactly what they think in all these meetings, but then you come to a vote. And the Prime Minister's position, which is we're willing to get to a deal, we want to get to a deal, we have red lines that we have to keep, but we want to get to that deal to bring those hostages back. Up until this point, we remember on October 7th, there were 250 hostages that were taken. We have succeeded in bringing 150 hostages back. 110 of them or so have been alive. And I tell you, the murder, the execution of these 6 hostages was gut-wrenching for all the people of Israel, no matter where they are on the political spectrum. You probably may have had them on the show, the Rachel and John Goldberg, Poland, what they have done in raising awareness about the plight of the hostages and their dignified struggle and heroic struggle really for their release. It was a major, major blow. And a lot of Israelis are angry, and I can understand that. I think that the anger has to be directed against Hamas in order for us to get to a deal. And yes, there will be people who will vote against the deal. I believe some of my colleagues in the government will vote against the deal. But the overwhelming majority backs of the country and also of the government backs the Prime Minister's position and wants to get to a deal.
Minister, you've been very generous with your time. Before we let you go, just a quick question. Will the Prime Minister be attending the UN General Assembly later this month in New York?
I believe he will, but, you know, with what happens in our region in the Middle East, you never know. I think he intends to go there, and hopefully we can make that happen. And he'll have a chance, just as he addressed the American people in the Congress a couple of months ago, will have a chance to address the world about how we move forward in this region and how we can move from this catastrophe that happened on October 7th to move towards a different future for Israelis, for Palestinians, and for everyone in the region.
Please let the Prime Minister know we would love the opportunity to sit down with him later on this month, sir. Minister, thank you very much for your time. Ron Dermer there, the Israel Minister of Strategic Affairs. Let's give you an update on stories elsewhere, just briefly, with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Goldman Sachs economists are cautioning that the U.S. GDP will take a hit in the second Trump presidency. The researchers, led by Alec Phillips, wrote, quote, the hit to growth from tariffs and tighter immigration policy would outweigh the positive fiscal impulse. Should VP Harris win with a Democratic sweep, Goldman said there would be a slight boost to GDP growth thanks to new spending and expanded middle-income tax credits, slightly offsetting the impact of higher corporate tax rates. Elon Musk's internet provider, Starlink, is reversing course, saying it will comply with Brazil's top court order to block the nation's access to X, formerly known as Twitter. The change follows a judicial order which froze Starlink's bank accounts. And the demand hit to aspirational luxury is forcing Swiss watchmakers to turn to the government for financial aid. Gerard Perregaux and Ulysse Nardin are the first brands to confirm that they're using the state assistance. So when Group CEO, which owns those manufacturers, called it a, quote, small watch crisis, under the government program, the Swiss state pays up to 80% of the workers' salaries. And that's your Bloomberg Brief. John.
Danny, thank you. Up next on the program, looking for a soft landing.
The fact that core inflation is running below 2%, to me, that suggests that they're already too tight. So going 50 on the first go is not a particularly big risk.
That conversation up next. You're watching Bloomberg TV.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product. It's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old. There's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Stocks lower, bonds rallying, yields down by 2 basis points. The 10-year 381.39 under surveillance this morning, looking for a soft landing.
The fact that core inflation is running below 2%, frankly, if you look at it since last summer, we've been below 2% annualized on a monthly basis most of the time, believe it or not. To me, that suggests that they're already too tight. So going 50 on the first go is not a particularly big risk.
Here's the latest this morning. Treasury yields extending declines after yesterday's soft ISM manufacturing print. Traders bracing for more volatility with fresh data ahead, including jolts at 10 a.m. Eastern Time. Roger Hallam of Vanguard writing the following: we think the pricing of near-term rate cuts is a little too aggressive. However, we acknowledge that the bar for a more rapid pace of easing, should further labour market softening become evident, is low. Roger joins us now for more. So, Roger, with that quote, and welcome to the programme, sir, just how difficult is it to invest in this moment, given the risk to either side in either direction?
Yeah, I think when you look at the trend in data we received last week, the economy still has what I would say is pretty reasonable momentum. GDP growing at 3% in the second quarter. The July spending data still suggesting the consumer has significant momentum. But then policy is in restrictive territory, and when we look forward into next year, we do see the economy is likely to slow, potentially approaching what we'll term stall speed around the middle of the year. So, Growth looks good now, but we do see slowing going forwards. I think the Federal Reserve acknowledges that as well. That's why they're set to start to ease at their September meeting. As I said in the quote, we think that the most likely scenario is the Fed starts to ease in a 25 per basis point clip, so 75 bips of easing this year. But we must acknowledge that with inflation now close to target and the labour market much looser than it was, those risks of a more proactive Fed easing stance, I think, is reasonable.
Roger, just how low is the bar to go 50? You mentioned the bar's low to ease even more. How low is it? What numbers are we talking about on Friday? And does it just come down to that one?